Don't worry about it. We're not going to be late. This isn't your other podcasts. We're not late. Try never to be late. I don't know how that became a running joke. I don't even know who made it. Could have been Tevis or myself or Roy. I don't know. We'll see. Amit is in the middle of something. He's technically not going to be late. He gets a hall pass. He is taking care of something. He should be on in 10 or 15 minutes. So it'll be me by myself for a little bit. And had a chance to go through a bunch of different things. And we're going to start off with Palantir, even though I know that Amit would probably love to talk about this. I got to tell you, I'm a little impressed. But I'm more impressed that all of you are here right now. Truly appreciate it. It's been a very long day. I have not stopped since 8:30 in the morning. Meetings, emails, projects, board meeting, seeking alpha. Favorite part of the day is coming on, hanging out with all of you, talking about the stock market, different news aspects. Getting a little silly. Probably talk about other things later on. Today was the 25-26 basketball release from Topps. May discuss that later. It was kind of a debacle, if I do say so myself. But very interesting. You know, I saw a lot of the comments before, and I got to tell you, half of you were right and half of you were wrong. It's been a long day, and when it's a long day, we go dark side. We go chocolate milk. Freaking delicious. You know, I don't know why everybody makes fun of me about this, but like, chocolate milk is delicious. Whole milk is delicious. It's freaking milk. It's delicious. Delicious. So let's just get into it. Palantir extends partnership with Lumen Technologies. The deal is worth up to $200 million. I mean, what doesn't this company do? It just feels like they freaking do everything. It's freaking crazy. Absolutely crazy. I mean, hats off to them. It's going to be interesting to see what they announce on Q3 earnings. When are they reporting? They're reporting on November 3rd, so 2 weeks. If they better beat 50%. I said they're going to do 49.8, so basically 50%. I think they're going to come in at 51, 52 now. We'll see. If they don't, I don't know what happens. I don't even want to think about it. I think they're going to do 50% or more. And I think Q4 is going to be 42%. I said it the other night. I'll say it again. Not many companies like Palantir, class of their own. Regardless of what I think about the valuation, it is an amazing freaking company. And they keep deploying more deals. It's great. Good for them. Very happy for them. Really interesting. Let's see. Oh, whoa. Valeros says it's moving ahead to shut down California refinery after talks with officials. That's no bueno. I do not like hearing that. And for those of you wondering, I did not get a chance to look at Supermicro yet. I do know that it was down almost 9% today. And I do know that, you know, it was a surprise given everything that we've seen from the data center build-outs. I'm a little surprised about it. I didn't get a chance to read into the report yet. I will definitely look into it and probably write something about it at some point. But it is a little bit of a surprise. I mean, let me look at it very quickly. It wasn't a big miss. It wasn't a big miss. I got to look more into it. I will tell you, if I don't find anything crazy in this and this gets to 40 or so, I would definitely consider getting back into it. I really would. Where did Tesla end today? Wow, Tesla reversed from last night and finished up $10. Like, seriously, that's how busy I was today. I didn't even get a chance to look. Didn't even, whoa, 2% gang. What's going on here, 2% gang? This is a whole milk gang, not 2%. We need that whole milk. Man, next week is the freaking week, isn't it? I'm excited for the data center build out, everybody. I really am. I think that this is going to be really good. I can't even keep up with these freaking comments. I will start going through them later. You guys are the best. Thank you so much. Look at Meta. All right. So I got to put together a game plan for next week. I do think Amazon's the dark horse. I do think that. Let me bring up why. Give me a sec. I want to bring up two charts about Amazon. I've really been flushing this out of my mind. I'm getting excited for earnings. I'm really excited for what Jassy's going to say. All right. I am learning how to be better about sharing my screen. I'm actually sharing the entire Windows now, not just the freaking screen. So that makes transitions much easier. All right. So last quarter, they took a dip, and it's mainly because of AWS. AWS did not hit the operating margin or the operating income level that the analysts wanted, even though top-line revenue growth in Amazon was a significant beat. These are my charts. I'm not using somebody else's work. These are my charts. I want to see Q3 revenue have a substantial increase, but more importantly, I want to see more than Q1 operating income. Now, the big thing is going to be operating income margin. This is the big thing. You've had 3 consecutive quarters over 11%, and you've had 5 out of the past 6 quarters over 10%. What Amazon, in my opinion, needs to do right now is they need to start laying out a plan. And they already started with the New York Times article with the 600,000 robots. Everybody knows my feelings. I don't like the fact that people are going to lose their jobs. I think we need to figure something out. We really need to have our elected officials really start thinking about this and talking about this, because robotics and AI is going to have drastic implications going forward. But we're not going to get into that right now. This could be very beneficial for Amazon over the next 5 years. And while they are a super large company right now, I think there's a path for them to get to a 20% operating income margin, maybe a little higher. You're already at 11%, up from low single digits in a fairly short period of time. Now, when I think about them optimizing their operations, optimizing their internal processes through AI, operations through robotics, I think that there's a world they can get to 20 to 25% operating income. And when we look at Amazon, what the analysts, not me, the analysts on the street believe that they're going to do in revenue, okay? 2029, 10 analysts. This isn't one lone wolf analyst, okay? 10 analysts are saying $1.04 trillion. This would be the first $1 trillion revenue company, okay? The only other company is Walmart that's even close to them, and they're not expected to hit $1 trillion in that time frame. They're only expected to get to 840 million by January 2030. So if Amazon can get to $1 trillion of revenue in 2029 at a 20% operating margin, that's $200 billion of operating income. And then if they can maintain that and they get to 1.2 trillion in 2031, I mean, this is a company that can implement a huge buyback program at that point while doing CapEx. And let's be honest, this is a company that nobody is building a better logistical network than. I mean, they're just not. We've seen every one of the big box retailers try to compete. You can't compete with Amazon. And I'm not buying this whole thing about how Costco's membership and their stores are impervious to inflation or recessions. Because guess what? I believe, and I could be wrong, but I believe that Amazon's next vertical is bulk shopping. Okay. And when I say that, everybody loves going to Costco because of all the different unique stuff they have, but the freaking amount you can buy. Amazon's not necessarily in that game right now, but nobody can match their delivery. If Amazon gets into that game and you no longer, and we all know when Costco gets busy, even though they do a great job of line management, guess what? Still takes time to check out. A Costco trip does not take less than 2 hours for most people between driving there, finding parking, shopping, checking out, getting back to your car, and then getting home. Minimum of 2 hours for a lot of people. I'm getting rid of my Costco membership before I get rid of my Amazon membership. So I can see a world where they go into the vertical of big box with their logistical network and squeeze Costco the same way they've squeezed everybody else. So I see a path for 200 billion plus of operating income at a 20% margin in 2029 on $1 trillion of revenue. And ladies and gentlemen, we have a legend backstage who's wearing a freaking Knicks hat, and I'm gonna. If I see his hands move, that means he can't answer the question. I want him to name the starting five of the Knicks. Let's see if he can. Oh, he can't.
There's no way in hell.
I know. I just didn't want to see your hands move.
You know what's funny about the Knicks, though? Last night, they were up by 7 with 5 minutes left. I was this close to spending a stupid amount of money buying the prediction markets contract. They were trading at 88 cents. I was like, okay, if they just win, I'll make 12 cents a contract. I was this close to swiping up on a stupid amount of contract. And I was like, wait a second. If they lose, this is not like a stock where it can recover. You're never getting this money back. I was like, let me not do this. But then they ended up winning. So I missed out on some money. I don't even
know what to say to that.
Dude, I was like, they're not gonna lose, right? There's 5 minutes left. But I was like, what if they do? Like, it's not just like a stock that goes down.
How about we don't do that stuff? How about we just don't do that stuff?
It's thrilling.
I know that you want to support Robinhood. I know you want them to get their penny of freaking revenue off of your contracts. But how about we just don't do that?
Yeah, well, I didn't do it, but I was close to doing it.
All right, good.
I stopped myself.
Good. I'm happy. Just don't do it.
What's up, man? How are you doing?
Burning the candle at both ends.
What does that mean? Burning the candle at both ends?
No sleep, man. We don't stop.
Oh, no sleep.
We don't stop. You've never heard burning the candle at both ends?
Has anyone actually heard that expression? What is this, 1927?
Of course everybody's heard that expression.
Burning the candle. No, see, someone said what? What do you say? Like no one knows this.
Everybody has heard freaking burning the candle at both ends.
I see a lot more no's than yeses in the chat.
All right, don't worry. I'm gonna go to YouTube and put a poll up. Don't you freaking worry.
I read it in a Charles Dickens book.
I mean, let's not go that crazy, but okay, sure. Charles.
Yeah, I've heard burning the midnight oil. I've heard that.
Yeah, okay, same difference.
All right, what are we going to talk about? What do we got going on in the markets?
Well, your favorite company, Palantir, nice little $200 million extension with Lumen.
Dude, I think we're going to 200. I think we're going to
200. I mean, if you keep buying, we're going to 200.
I really do. I mean, I just think this is going to be one of those quarters that is lights out. But then again, I always have to remind myself they're trading at 400 billion and they do 4 billion in revenue. Like I always have to be like, yeah, you got to remember like that's where they're at. But I also
pinch yourself and wake up.
Yeah, but then I'm also like, but no other company is growing as fast as they are in software. Like, if they can sustain that, they will grow into this. Potentially even expand it if we can keep the growth rates up.
They're gonna do 50%. You and I know this. They're doing 50% this quarter, year over year, and it's likely they're doing 42% or more next quarter. There is just no way that they don't do that at this point with what they've guided, and you have to think they're beating their guidance. They always do.
Yo, who are we betting on tonight in the NBA?
Hold on. Before we get to that, I'm flabbergasted right now, everybody. There's already 143 votes, and 34% of you have never heard burning the candle at both ends. What's going on here?
I told you, it's not a common saying.
Jeez.
Burning the candle at both ends.
Jeez.
Kathy bought hood yesterday. She didn't buy it today. She bought it yesterday.
Crazy.
That's a 1900s term. All right, what are we buying? Are we buying Golden State Warriors against the Denver Nuggets?
Can I ask you a serious question?
Go ahead.
Why are you trying to buy prediction contracts on sport you don't watch or follow?
Okay, first of all, I do know basketball. I know basketball more than
hold on. I didn't say you don't know basketball. I said you don't watch and you don't follow it. There's a difference. You're not actively watching games or reading the forums or looking at injury reports or doing anything. You can't even name the starting lineups of the teams you're going to bet on.
Can you name the entire executive team of NVIDIA?
Jensen Wine is all you need
Got
to know.
Got it.
Who all else? You need to know. And I can read financial statements.
All I need to know is Curry. That's it.
No. I can read financial statements. Okay. You are not following basketball. But buy option contracts on Palantir. I would much rather see you do that than bet NBA.
No, I know. I'm just kidding. I don't bet on NFL, but for basketball, I know a little bit more. But I have yet to buy an NBA contract. Yesterday, I was going to do it, but then I didn't. So I haven't really bought any of these. The one time I buy it in the freaking NFL, the Chiefs, they fucking shit the bed. I was like, okay, so that one didn't work.
Okay. All right.
But yeah, no, Palantir's crushing him. It was a good.
I don't know what to say to you anymore.
Dude, I'm not a degenerate gambler. I'm just exploring.
Right. So let's not make it a habit.
I need to bet on Ohtani. That's what I need to bet on.
Yeah, greatest baseball player of all time.
I think he's officially become the greatest baseball player of all time.
He is officially the greatest baseball player of all time. There's no question about it. You know what I found last night, Amit?
What?
I found an actual website that does the tier list, already has all the pictures done. You just move them into the thing. And it's got everything from movies to sports.
Yeah, I saw that. I saw you and Matt were doing it. And
oh boy. At some point, like Saturday, I already told Tanner, Saturday night, MMA, we're doing a freaking MMA GOAT tier list. It's going to be fun.
Dude, is Steve blurry for some of you guys? Put in the chat if Steve's blurry. You just became super blurry. You were blurry last night too. And I'm like, is this a me thing? Or
What the hell is going on?
Steve's blurry, right, guys? It's like it's not horrible, but it's a little potato.
Is it grainy?
Yeah, it's grainy. That's the word. You were like that last night too, and I was like, why is your it's I don't think it's your connection. But it has to be because it's not your camera. Your camera's fine.
Not my camera. I will check the connection after the stream. I mean, that doesn't make any freaking sense.
Now it's worse. Yeah, that doesn't make sense because he has. Do you have 480p? It's the candle burning. Do you have any thing on the lens or anything?
No. Trust me, I'm not like you. I don't have freaking plastic on the freaking TV.
Yeah, I don't know why. It was like that last night, and I thought it was my phone or something.
That doesn't make any freaking sense. All right, hold on.
I don't know. You can leave and come back if you want and try it. I don't know why that's.
I mean, I don't want to go reset the internet because then I'll be.
StreamYard won't die. StreamYard is fine. If you need a couple minutes, that's fine.
What do I do? Just hit leave studio?
Yeah, just press X on the. Yeah, just exit out the tab and restart it. It'll still stay on.
All right, so X out the tab. It'll still stay on. I'll be back in a minute.
Yeah. That's weird, right, guys? Like, I thought it was even last night. I was like, why is it so blurry? It's like a grainy type of blurry. All right, I'm taking over Steve's channel. For some reason, I recognize a lot of you in the chat. All right, guys, who we're betting on now that he's gone? Now we can actually make some bets. What are we doing? OKC, Indiana, 94-95, fourth quarter, 6 minutes left. Damn, it's literally 51-48. Literally 51-48. That is wild. It's literally 50-50. That is crazy. To be honest, I really haven't bet on any of this stuff yet, but it's just crazy to me how this product has consumed so many people, and they're opening up so many more of these ideas. But Steve is right. I don't know enough about the NBA to be betting on. Maybe like when I was in high school, I like religiously studied all the games and the players and all this stuff. Now I don't know that much to be excited about it. It is not my birthday. Spencer, thanks for the super chat. But it is not my birthday. Birthday's on Monday. But it's not there today. I have a Sony A6 400. Sony Paul, if you're straight again, let Steve's chat decide. Yeah, he texted me when he saw someone screenshotted the freaking picture of me asking if I was gay on the poll, and they put it on X. And yeah, that was funny. That was hilarious. I'll talk with Steve about this Oracle news. This data center shit is becoming very serious, and $40 billion of debt is pretty wild. It's not betting, it's predicting. Exactly. It's not betting, it's predicting. And then you have that Jane Street news. Again, the Jane Street stuff is not the most bullish. There was a paragraph here that I think is really important. Jane Street likely acquired shares as part of a delta neutral option strategy where they sell retail shareholders call options and pocket the premium. Jane Street is a proprietary trading fund that makes the vast majority of its profit from principal market making activities. So again, this whole like 5% option stake in Cypher, it means nothing. Like it actually means nothing. And I know Cypher is pumping on it, but it meant nothing for Open Door. It would mean nothing for Palantir or Hood. Like these companies have to take these stakes to be able to pocket the premium on delta neutral. Delta neutral strategies means they're not taking any risk on the option up or down. They're making pennies of a penny, but they do it like millions of times a day. That's how they make so much money. But regardless, that is helping Cypher after hours. I think the real news that's helping Cypher and Iran and Nebi's CoreWeave is the Oracle stuff. And I think Steve's take on that will be pretty interesting as well, just given they're tapping the debt markets, which is kind of the bearish aspect of it, but still 38 billion of debt. The fact that they're getting that is incredible. 5% is not wild. I mean, 5%, the 5% sounds wild because it's like 5% of the company, but 5%, that just means they have tons of demand. Like if you have massive amount of retail investors buying these call options. Again, these call options you're buying the right to buy 100 shares. In order to have the right to buy 100 shares, someone has to have those 100 shares ready for you to buy, aka a Jane Street or a Citadel. So the reason they're buying all these shares is because they are going to do something with those shares. They're not buying it for the hell of buying. They're not buying it because they're like, oh, we think Cypher is going to go higher. If no one was buying these call options or selling these call options, Jane Street would not be buying these shares because they couldn't make any money off the shares. But it's a headline that gets people excited. I think the Oracle news is the one that matters most. Dude, CPI, yeah, that is tomorrow. Most firms are thinking 3%. I hope we come in at 3. Hopefully, even if we're a little bit above, it's not the worst thing. If we are massively above, that's an issue. A little bit below would be perfect, but we got to see where we can come in. Why are we talking stocks? Steve has conditioned you guys to not talk stocks. Goodness, bro. Steve's coming back. He's fixing his camera and his network because it was not the best image quality. I came here for milk talk. Okay, well, we don't want to talk stocks. So what do we want to talk about? What topic do we want to talk about? What do we talk about on Steve's channel?
Is that any better?
Dude, I tried talking stocks. They were like, we only talk milk here. We don't talk stocks.
Dude, where's your milk?
And no, it's not better.
How is that even possible?
Welcome to live streaming, Brody. Welcome to live streaming.
Trust me, I don't have old man technology. I have a freaking gig up, gig down. Like,
Dude,
this
it's
doesn't make
probably
any
not
sense.
even it's probably not even your fault. It happened that you were streaming perfectly for 2 weeks and now randomly this like it just happens. Like you just never like sometimes shit just happens and it's annoying as hell, but I doubt it's even your fault. Like honestly, maybe a little boy who cried wolf here, but I'll blame StreamYard, bro. I'll freaking blame StreamYard because it's not your internet connection. It's definitely not your computer. So there's only
Oh,
one culprit
it's
left.
definitely not my freaking computer.
Yeah, and it's not your internet. Like unless you
And I will
change your
tell you, and I turn my VPN off.
Oh, dude, now it's bad, bro. Now it's like legit pixel. That's so weird. It's like when, yeah, it's like then it went to normal, not normal, but normal. Then you move a little bit, and then it gets pixelated.
Huh.
I mean, it's tolerable. It's not a big deal. Like you'll figure it out tomorrow or something.
No, it's annoying because it looks fine on my end when I'm looking at everything.
It was there last night too, and I thought it was
That's
my
what people
internet.
were saying. That doesn't make any sense.
Maybe it's AWS.
You know what? We're going to blame the AWS glitch. It's all started happening after AWS.
Are you sure you didn't spill milk on your computer?
I'm sure I didn't spill milk on the computer.
I feel like you've spilled milk on your computer more than once in your life. I really do.
I've never spilled milk on my computer. That'd be a waste of milk.
Admit, do you drink 2%? No, I don't drink milk, bro. I think milk is it's not good. I can't believe Steve drinks ice cold milk. Like I don't.
It's so good. I'm finishing chocolate milk right now.
Dude, chocolate milk, strawberry milk, like just the concept of milk, bro. I don't like it. Lactose obtuse, exactly.
Is it still grainy?
Yeah, dude, it's still grainy.
All right, give me a sec. I'm going to try one thing. Hold on.
All right, back to me. What do we talk about since we can't talk stocks here? What do we discuss? What do we discuss? Has he tried turning it off and on again? Movies. You guys talk enough movies. When I'm on, no more movies. Because none of you guys actually know that much about movies. I feel like I'm the only person that on YouTube that actually understands movies. I feel like it's a disservice for me to even talk about it with you guys, to be honest. You and Steve can have your little quarrels about movies, but I feel like when there's a professional movie connoisseur on, we should have some respect. So I don't think we should talk about movies. What's your fave snack? I don't know. I mean, because we're on Steve's channel, I feel like I should say chocolate chip cookie. Right? Although I don't eat cookies like Steve, bro. Steve eats cookies a lot more than me. Like a lot more than me. But I do like cookies. Just not as much as Steve. What's your favorite chip? Sour cream and onion is overhyped. There are purple Doritos. You guys remember the spicy purple Doritos? I don't know if they're called spicy or if they are spicy. I don't know if they're called spicy or not, but spicy purple Doritos. I feel like those are my favorite chips. How much you sleep at night? I've been getting decent sleep. I feel like I sleep like 6 hours, 6.5. 6 hours is decent. 6 hours is decent. Are you saying Steve is fat? No, this is so funny. But when we had steak the other day and I saw him again, this is like the second time I saw him in 5 months. Dude, Steve is built. I told him this. His face looks chubby when he's on live. But when you see him in person, like he's legit built and he is not big. He's genuinely not a big guy. He's not fat by any sense of the imagination. That's why when he says, like, everyone asks him how he's not 500 pounds because he eats so much, like, that's a legit question. Because every time I see, he's not a big guy. Oh, I think you fixed it.
I have an idea of what it was.
What was it?
So I think, is it grainy right now?
No.
Okay. So in my security suite, I have a backup smart firewall. And I don't know why I just thought of it, but sometimes it messes with things and I turned it off.
So now we're going to get hacked. Great job. Great freaking job, man.
No, it's a secondary firewall.
No, now we're going to get hacked.
No, I have so much security on this freaking thing.
You've created the opportunity for our stream to get nuked now.
No, I have so much security on this thing. Don't you worry.
Guys, if the stream goes down, you guys know. You guys know why. Now we know.
I don't know what to tell you.
No, but it's good. You fixed it. That's good. I can't believe that's what fixed it. I've never done like whatever you just did to fix it.
Well, I reset the network. That didn't work because I ran a speed test and saw that I was in a good range. So I thought about what it was, and my redundancy of protection was probably messing with StreamYard. So
yeah, that makes sense.
I'm just going to have to remember to turn that off when I stream.
I was telling them when we got steak and I saw you again, I was like, bro, Steve is jacked. Every time I say it,
jacked.
I wish everyone gets to see you one day in person. Like on YouTube, the way your head is and the way like you're totally different when in person. He's freaking jacked, bro.
I'm not. Dude, I haven't worked out in like 4 years.
Look at this guy. This guy is jacked.
No, I'm not. Horrible picture.
Jacked, bro.
Horrible picture.
It's a good steak, though.
Chewing. How good was that steak?
Such a good steak. It's a great steak. It tasted better the day after. It tasted even better the day after.
So we're gonna get into that, but hold on. I 100% do not have a freaking six-pack. Let's get that straight. I got a six-pack of cookies. That's about it.
Yeah, but I was saying you're not big, bro. Like you're not heavy or anything.
Yeah, I'm not jacked.
You might not be jacked, but you're definitely not heavy. You're
like, dude, that's not jacked. Like, I'm not jacked.
All right, it's fair.
I mean,
six-pack of milk. Yes.
Six-pack of milk. So Amit's the only person that I have met that we go to a steakhouse, okay? And this isn't like it was a nice place, right, Amit?
Yeah, it was a great place.
All right. This guy orders that, fine, no problem, having a good time. I'm not even sure if he finished half his steak. And then...
but I finished it the day after. I couldn't finish all of it.
Hold on. See how he's not even freaking saying that I'm wrong? He may not have finished half the steak. He may have finished 40%. And then he's like, oh, yeah, we need to get dessert menus. And he was legitimately debating getting 2 desserts. So I was like, I just want cappuccino. I don't need a dessert. It's too early in the day for dessert. He was about to get 2 desserts. I'm like, you can get 3. I don't freaking care. Get whatever you want. And
no, because I thought you and me both were going to share it. But then this guy doesn't even take a bite of it. Like,
housed this dessert. He didn't have room to finish his steak, but he housed this dessert. I mean, freaking housed it.
Dude, chocolate
incredible.
It was incredible. You know what? We got a lava chocolate cake with ice cream, and it reminded me of the Applebee's one.
Whoa.
But the Applebee's one.
Hold on, you, not we, you.
I got it. Steve didn't take a bite. But it reminded me of the Applebee's one, but it was 10x better because the Applebee's one is like your local Applebee's. This one is like a gourmet chocolate lava cake. And it was a tiny one. It was a small one, but it was so like delicious. So
I know that the judge collector who I see is in the audience. I know that he's been to Uncle Jack's before on 9th and 35th. So that's where we went. Uncle Jack's is freaking great.
Yeah, I mean, look, I think it was some of the best steak I've had in my life. I'm not gonna lie, like it really was. I think it was better than Ben and Jack's. I really do.
Oh, 100% it was. And I'll
'Cause I
say
remember
it's in my top 5 steakhouses in NYC.
well, I've only been to like
Nobody's
4
ever heard of this place either. It's crazy. Like, it is so freaking good.
Yeah, and look, I like when I go out, I want to have dessert. Like I want to see the full suite of options, and that dessert was good dessert. Like we didn't try their tiramisu or their cheesecake, but their chocolate lava cake was phenomenal. So it gets to that 10 stars for me if it can actually finish with dessert correctly.
Dude, what? Like, the chat is freaking great, but it's like I just said I haven't worked out in over 4 years, probably since before the pandemic. And people are asking if I take creatine. It's like, no, I don't take creatine. Never taken creatine, actually. But yeah, Uncle Jack's is freaking great. I'm excited for Matt to come up so I can take you guys somewhere. I'm debating where I want to take you guys, but it's going to be somewhere good.
So should we talk about Oracle and data centers, or does everyone just want us to talk
Sure,
about
let's go.
other? I think people don't come here to listen to data center conversation. I started talking about it. They were like, why is he talking about Cypher and Iran? Like, we come here to talk about milk. I was like, okay.
Dude, this channel is like serious for the first half an hour, then it goes in weird directions.
It is later at night, dude. That is the thing about late night streams is like people are just so done with like the real world at night. They just kind of want to sit back and.
Can I tell you what happened today?
Go ahead.
The 25-26 NBA basketball cards launched today. Today was the official release date, and there's some freaking drama out there. Topps had them on the website for pre-order for $225, and shops online are selling them for $530. It is freaking crazy. Now, luckily, the judge collector grabbed us a few at a very good price, but it's crazy what's going on out there. And I'm telling you, this is going to be a set that everybody, I think, is going to do well on if they keep it sealed. I think people ripping right now is crazy. This set could keep going up in value. It's pretty wild.
We need to buy some Wembanyama rookie bros.
Judge collector's got a ton of them.
Wembanyama rookie card. That man's gonna get $1 billion contract one day, bro.
Yeah, I hope he doesn't get injured this year.
Did he get injured last year?
Got injured last year.
No. He's tall.
This is why you should not bet on basketball.
Yeah. See, I didn't even know that. Yeah, I think Wembanyama can do very well. And I mean, just yesterday, I was watching a couple of his plays, and I was like, goodness gracious, dude. This guy's legit.
Oh, so Jeff Wilson came out with a video, and he is now going to the private equity market to go raise money to build 4 more gigantic card shops. It's wild. It's wild what's going on in the sports card world.
It's happening.
Dude, it is happening. It is freaking happening.
What was I gonna say? Oh, did you see this clip, bro? Like, this thing is kind of wild. I didn't show this on the market close, but take a listen to this. I want everyone to guess who they think the person is. Here, share this clip.
Is this going to get me in trouble?
No, you're good. You're good.
Okay.
And a friend of mine, talking about donors, a friend of mine, a man that's great. I'm not going to use his name unless he lets me do it. Susie can tell you about this, but he called us the other day and he said, I'd like to contribute any shortfall you have because of the Democrat shutdown. I'd like to personally contribute any shortfall you have with the military, because I love the military and I love the country, and any shortfall, if there's a shortfall, I'll contribute it. And today he sent us a check for $130 million.
Can you share who that is?
I would love to tell you he doesn't really want the recognition,
think I know
if you
who
want
it
to know
is.
the truth. But he gave us a
He gave him $130 million to pay for the troops during the shutdown.
Yeah, it's not Elon. I'll tell you. Want to know who it is? Probably.
Oh, no, hold on. Before you say, everyone guess.
I don't
think we
know
should-
who it is. I don't know who it is, but I have an idea who it is.
Are you going to say Carp?
I'm gonna say either Peter Thiel or Karp. Yes. Even though that would be a conflict of interest, I can completely see it being one of them or Lucker Palmer.
Dude, are you trolling?
Yes.
You're definitely trolling, bro. You're definitely trolling. It was Palmer Lucky.
Was it Palmer Lucky? I could see that.
I don't want to say this live, but it was me. And I just made sure that.
Well, I mean, I saw an interview. I saw that. Why didn't you text me? I wanted to. If you had texted me, I would have watched that interview. I saw it come up on X like an hour ago.
What interview?
That a $50,000 loss turned into.
Oh, that? You want to listen to a podcast of me talk to someone?
Yeah, I would have listened to it in the background.
I did that a couple weeks ago, but yeah, that came out today. Dude, no, I don't think it could be a public company CEO. I think that's too.
Wait, so you actually don't know who it is?
Of course, I don't know who it is. Who like?
Oh, so you made it seem like you knew who it was, and we should be guessing.
How would I know who it is? And I'm like,
freaking know.
I don't think it was Carper Teal. I don't think they're allowed to do. Dude, their lawyers would go crazy.
So then it was probably David Sachs or Chamath buying some goodwill.
It's someone who is buying goodwill.
Yeah,
it's someone who's, but someone who can't get easily in trouble for doing that.
It was probably Chamath. He's building that new freaking thing with his son.
It could have been Ken Langone.
Could have been Langone. I don't think it was Langone though.
It's got to be a billionaire. If you're going to give away $130 million, we're talking about okay, what net worth minimum 20 billion? Because even with 10 billion, can you actually give away 130?
Minimum 5 to 10.
No, dude, 5. You can't give 130 million if you're only worth 5.
Why?
I feel like that's too.
If you have $5 billion, what's 130 million?
No, isn't that as a percentage? That's still a significant amount.
Not really.
Yeah, that's about 2.6%. I don't think you just give away 2.6% of your net worth. Like, I don't.
Hold on. If you're worth $5 billion, okay, what's the difference between you being worth $5 billion or 4.8 billion?
No. If you were giving 13 million away, I could understand. 130 million is a different question.
Dude,
I think you've got to be at least 20 billion.
If I was worth $5 billion, I would have written that check in a heartbeat for the military.
No, but see, the thing is, when people get a lot of money, they are a bit more careful with how they just give it away. I'm not saying you wouldn't do it.
Realize that that's a tax break, right? Donation.
Well, so that's the other question. If they did it as a tax write-off, that changes a lot of stuff.
Pretty sure that's called a write-off, sir.
But I still don't think $5 billion is enough for you. That's not enough FU money to give away 130 million. Not at all. I think you give away 1.3, 13, maybe 20, not 130 million. Like,
yeah, I mean the chat's got some freaking good guesses. Maybe it was Sir Joseph Carlson.
Maybe it was Sir Joseph. It was not Benioff. I don't think it was Jensen. I don't think it was Tim. It can't be a public market CEO. I don't think that's because if Trump said their name and it's a public market CEO, I think immediately people would freak out. Tim Cook donates 130 million. Like, no, bro, there's no way. There's no way Tim Cook wants that.
Yeah, I mean, look, it could have been freaking Chamath.
Chamath's not that rich, though, bro. He's not that rich at all. He's barely a billionaire. Like, this guy has not had the best performing record in the stock market. He made all his money off Facebook, but that was 12 years ago.
You don't know how much Bitcoin that guy's holding.
Oh, come on, dude. Don't tell me this guy's holding tons and tons
He's
of
Satoshi.
Bitcoin. You think he would be charging $1,000 a year for his Substack if he had billions?
Dude, he's Satoshi.
I heavily doubt he's Satoshi.
Joe Lonsdale's a good guess, by the way.
Ellison's actually a great guess.
Ellison's a great guess.
But the problem is, can you do that as a public CEO?
If it's his personal money, why not?
No, yeah. Why? Well, because you're still a public CEO. Like,
So what?
I don't know. Maybe.
Bill Ackman's not a bad guess.
Bill Ackman's not that rich either, though. Bill Ackman net worth. Yeah, well, 9.2. I think we have to be at least 20 billion to do this, but yeah, 9.2 billion is there. Maybe it was a Saudi prince or something.
Who knows?
That
Maybe it
could
was
get-
Barron.
Maybe it was Barrett. That is correct. Maybe it was
Trying to
Barrett.
become the favorite son.
Trying to become the favorite son.
It was actually Pelosi. She made so much money on stocks. When is the government reopening? When do we think they're going to reopen the government?
So I was looking at this yesterday. Every time we've had a major shutdown, it coincided with a debt ceiling raise, which is why the Democrats and Republicans actually got their shit together and like negotiated. We don't have a debt ceiling raise coming up. So there were people thinking like this could last easily until next year. And if you listen
It's
to Bernie
certainly not
Sanders,
affecting earnings season.
it's not. Bernie Sanders was like, I will not negotiate at all until we can agree to extend healthcare subsidies. Like he was adamant, like he was not going to even think of negotiating. So I don't know. What do you think of Trump potentially taking a stake in some of these quantum companies?
I don't like the government taking stakes in companies, even though it can turn out to be a very good investment for the American people. I just think that the US government taking stakes in companies is borderline picking winners. And I don't know if that's a good thing.
Well, he picked Intel, and we should have freaking listened when he did.
Now,
You saw Intel After Hours, right?
I'm about to second guess myself with what I just said, but let me rephrase it. I don't think picking winners is a good thing, but I do think securing our future from a strategic defense position is important. And making sure Intel succeeds is a hedge against international supply chain trouble. And it's very important that Intel survives and that their foundries actually operate at mass capacity.
The quantum bulls would say that the China threat of quantum supremacy is something that would justify the United States taking the investment stake.
Yeah. I'm not worried about China breaking quantum before us. I mean, let's go down the list of American companies versus Chinese companies. Like, are we really worried about them breaking quantum before us? I'm not. Everything they do, they copy our IP.
Yeah, I also think, I mean, why wouldn't they take a stake in Google or IBM then if they're so worried about quantum supremacy? Like, why not? I mean, Google just announced a massive breakthrough, right? So, like, and that would be bad if the US took a stake in Google, but like, if it's so important to defend quantum supremacy, like, okay, then we got to take a stake in it, just like you. And I agree with you on Intel. Like, if China invades Taiwan and we have no chips, like, so we got to do something, right? We need some foundries in America, and Intel is the best option.
It's very important that Intel survives.
Yeah. I mean, dude, at 20, he bought them at 25. It's like, could have just thrown a couple $1,000 at it and just let it ride.
Dude,
Stocks at 41. Like,
we need to set up a fund between our little group of friends and just give one person the controls, and then I'll just tell them what to do and they just need to do it, because everything I happen to say just kind of works for some odd reason as long as I don't buy it. So that's got to be the rules. I'm not allowed to buy it, and I just say what's going to happen.
yeah.
Because I was saying we should really consider Intel at 18, and then next thing you know, freaking that happens. Like the most obscure stuff. I don't know.
Yeah, it is.
Freaking Intel.
Intel was just easy too, dude. It's like semiconductors, data set. Like, it was just such.
It was so easy. It's like They are still dominant in x86 chips. They're still dominant in servers. Like, it was such an easy pick. Such an easy freaking pick. I'm just not allowed to buy it. And that's why Verizon's not going up, because I own it.
I was having a conversation with my dad the other day, and he was like, I want you to take out money and put it in a separate account and have it just like be super boring stuff. He's like, can you just like because he's like HUD and all this other stuff that like super volatile, because he's in some of those things, right? So he sees the
Right.
swing, so he's just imagining my portfolio every day dealing with the swings, and he'll be like, we need some just safe shit. And I was like, well, I've been doing a lot of research on dividend stocks, and he didn't really understand what a dividend is and all this. So I had to like explain what it means to like, buy a stock that's yielding you 6%, but there's not that much upside in it. And so Verizon is on the list of one of those companies that I want to just throw some money into in a more safe way.
I got something for you. A lot of people don't like it. I happen to like it. Neos Investments makes 2 ETFs that are freaking, I think, very interesting. SPYI is right up your alley. Same with QQQI. Right up your alley. They both own the index. One owns the S&P, one owns the NASDAQ, and they do call spreads on them. So they sell covered calls. They pay out a large portion of the income generated, premium generated, and they retain a little bit and buy one layer up, I believe, out of the money call option so they can participate in the upside of the market. It's actually doing really well. In the first in the first 10 months of this year, it's already a 10.2% yield on cost if you were bought at the beginning of the year. I actually have a chart that I built for an article. I'll show you.
I like Altria. I like Verizon. I like, honestly, AT&T, I still think has a pretty good.
Yeah, nobody's getting rid of their cell phones. They're modern age utility companies.
Yeah, their wireless penetration, especially with some of the stuff they're trying to do via satellites, is like not something. It's maybe there's not a lot of financial upside in terms of the share price, but if there is any, you're at least getting some potential. I like American Express. There's a bunch of these dividend names I've been looking at.
American Express is interesting. Check this out, though. This is all fresh data. I ran the numbers about a couple hours ago. All right. So SPY on a total return basis, including the dividend, is up 15.5%. SPYI, trailing it by not that much, and you've already generated a yield on cost of just over 10% with almost 3% of appreciation.
This is via covered calls that they're selling?
They're doing call spreads.
Gotcha.
But they're using the bulk of the premium to pay out his income, and they're buying out of the money calls to participate in the market. And they pay a monthly distribution. And since inception, they've averaged, I think, 48 cents per share each month. It's very interesting. It's right now my favorite. Neos Group has my favorite call option ETFs right now with SPYI and QQQI.
No, I think it's a good idea. Yeah, there's no NAV erosion in the same way.
What about pipelines? We need more energy.
Kinder Morgan,
Enbridge.
I mean,
now remember, if you go MLPs, you have a K1 you got to deal with. So I got a way around that for you. AMLP, the Illyrian MLP ETF. There's no freaking K1 with that, and it's got all the big boys in it.
Yeah,
and I think it's paying you 8%, 8.5%.
So here's the question. Let's actually begin this conversation because I've been thinking of it as well in a lot of ways. And
is it philosophical?
No, it's about the stock market. Do you want to have a philosophical do you want me to you want to talk philosophy with me, or
Not right now, no.
we can talk philosophy?
8.3% dividend yield from AML Pay. And when I look at the holdings, I mean, I'm a little surprised that Western is their number one holding, but not by much. I mean, you're getting 25% of the fund is just ET and freaking
Chenier, Sunco.
what is Enterprise Price? This EPD.
I've
I
heard
don't know
of
why I
these.
have brain fog right there. But yeah, this is freaking pipeline heaven right here.
Okay, so here's the question, and I'm curious what the chat has to say about this as well. How are you thinking? I'm working on an article on this probably over the next coming weeks. How are you thinking of portfolio construction in 2026? And I know you own everything already, but like let's say you were starting fresh. But here's the ramification, the variables in this. Let's say you're starting fresh.
Can
Let's
I make
say
a
you
joke
have-
real quick?
Go ahead.
Higher. You're trying so hard not to laugh.
No, I'm actually not. That one didn't hit. That one
It hit.
didn't hit. I'm sorry. That was a
Portfolio
miss.
construction higher.
It's okay. That wasn't a miss. That's
All
okay.
right.
Sometimes you
Keep
miss.
going.
Sometimes
Keep
you miss.
going.
Sometimes you miss. It's all right. You guys got to, dude. You guys got to keep him honest on his channel. When I come, he doesn't try this nonsense. Like we gotta make sure you guys keep it. Don't just laugh at his jokes because to fill his ego. But no, look, like if you're starting fresh and you have 100,000, how would you be thinking of 2026 portfolio construction? Because I don't know if I can rely on Hood next year to give me the types of gains it gave me this year. Not saying I'm bearish Hood. I'm just saying if I go in with the idea that Hood's going to carry me, I might be disappointed, and I don't want to have an underperforming year just because you leaned in on your winners when maybe it got a little too aggressive for them to keep winning. Hood at 29 is not the same as Hood at 130. I don't know if the data center plays are just going to keep going up and up. I'm curious what you think. I don't know if there's maybe a shift from growth to value. I don't know if Salesforce and PayPal are like the major winners of early next year over NVIDIA and Tesla. I don't know if AMD, potentially OpenAI, doesn't really work that hard to build out their data centers because AMD is preoccupied or OpenAI is preoccupied, and AMD doesn't get the juicy revenue on the gigawatts. Like there's all these variables. This year was the evolution of the beginning of this data center build out. How does 2026 play out? On top of that, it's a midterm year. Historically, midterm years suck. So there's got to be some level of hedging. We're probably going to have a couple 10% drawdowns, right? So what are you thinking about for next year?
I'm not changing much. Here's why.
Really? You're sticking with NVIDIA? That's it?
Dude, I have
NVIDIA and
so
PM&R,
many,
that's your strategy?
I have so many ETFs. You gotta remember that I have different baskets, and when you look at my
But see,
portfolio on an aggregate,
that ruins the point. I'm telling you to think fresh. Like if you had $100,000 and you have to turn that 100,000 into more,
right?
like how would you invest? Don't think of your average on Meta from 2012. Like that's not helpful, right?
But that's part of the portfolio. Like I'm not selling Meta. You know what I mean? And I'm not selling VOO.
But those things you're going to have for the rest of your life, most likely. I'm saying if you had to start fresh, if someone gave you 100 grand and said, Steve, turn this into a lot more than 100 grand, how would you construct the portfolio in 2026?
Well, what's the definition of a lot more? What's the parameters?
I mean, look, if we're talking about Stanley Druckenmiller, he would want 30% returns. How do you get 30% next year on that 100 grand? A lot of people here are up way more than 30%. So 30% sounds like a little bit, but if you are a professional money manager, 30% is phenomenal. How do you do that?
I don't want to say.
I think I'm just saying it's an important conversation because if we stick with the same strategy in 26 and it doesn't work, because sometimes shit doesn't work, then I think people are going to be really disappointed with 2026.
All right. Keep in mind, what I'm about to say is only for me, not for anybody else to go do. And I'm not changing my current positions. But keep in mind, 30% increase in a year is not realistic. I don't care what the past year or 2 years is. It's not realistic. Anyway, I do think the big companies are just going to get bigger. And the first way you phrased this was much different. So I'm going to give you two answers. One, if I was looking for total return, I'm going with a basket of very few companies that I have very high conviction in. It's Amazon. It's NVIDIA. I can't
Well, hold
believe
on. Before you continue, this is an important mental thought experiment. Like, yes, 30% is really hard to get, but remember, we're picking individual stocks here, right?
Right.
All of us are, we have to be beating the S&P if we're picking individual stocks. So when you say 30% is hard to get, the S&P probably is going to end the year at maybe 20%. Right now it's at like 15%. I'm talking about double the S&P, which if you're picking individual stocks, the quality of your stock picking determines how well you should be able to beat the S&P. If you beat by 2%, you were better off just buying the S&P, right?
Yeah, I mean, look, I'm going with 4 companies. I'm going with freaking Amazon, NVIDIA, Broadcom, and Salesforce is going to be my dark horse.
I don't know if those 4 are enough to give you a 30% return next year. Dude, NVIDIA's going to be probably 4.6 to 4.7 trillion by end of
You
year.
could just buy the Qs because if you think the S&P is going to do 20%, the Qs could probably do 30%.
But we're not talking about buying the
All
market.
right, so individual stocks, those are my 4 picks. Salesforce is another value cash flow machine, and I think the big companies are just going to get bigger, and I think Amazon's going to increase their margins. I don't think that that's going to change.
I really want to spend the next couple months looking for some dark horse names that are not the NVIDIAs, the Amazons of the world. I think those are important.
Dude,
but I feel like there's more alpha in
do
other
me a
names.
favor. Write your next deep dive on Salesforce. Don't listen to everybody who has an opinion about Salesforce's product because they don't like using it. Actually,
hold on, Steve. We already know what they're going to do next year. 10% growth.
I'm just saying.
What is there deep to dive into?
Profitability, what they're doing with their cash.
You already told us how profitable they're going to be. And it's not even that good until 2030. Like, there's nothing to look into. We know it's undervalued, but there's not I'm talking about like the Amcors of the world, American industrial semiconductor companies. I'm not saying they're the winners next year. I'm just saying, could we find companies like that could have a full re-rating that could get you that 30, 40, 50?
So how about this for an idea? If there's a rotation out of big tech, who stands to benefit? Most likely, this is going to sound weird, but I'll weave it in. Coca-Cola and companies like that will be able to drive a lot of efficiency through utilizing AI. You may see a broad market rally with those companies.
I think it's going to be very hard for the value names to actually be what carries the market next year, unless we have a recession. So I'm assuming we're not going to have a recession, but I'm also assuming the market's not going to be good enough to get NVIDIA to give you 50%. And that's the hard part about 2020. And it should be hard, right? Not every year is a walk in the park. Like, these are tough. This is why Druckenmiller gets all the credit for doing it over 2 decades every year, right? Like, I don't think Coca-Cola is your winner next year, but I also don't think NVIDIA has to be the winner next year.
So
I think it's going to take some really deep stock picking to be successful in 26. That's what I'm trying to say.
I think that there's companies. So something like this, like Coca-Cola, keep in mind, just their selling, general, and administrative expenses is over $14 billion. Through robotics and AI, companies like that will be able to squeeze out a lot of additional margin. They may be able to drop this down to 2 or 4 billion over the next 2 years from implementing these types of efficiencies. So that theory, if it materializes, companies like that will be able to outperform on EPS by so much they'll get re-rated. And especially because they've trailed the S&P by so much over the past 5 years.
I still think there needs to be a really good, there's still a narrative driven, it's still a narrative driven stock market. I just don't think there's going to, Coca-Cola, McDonald's, UPS, Walmart, they like, or not Walmart because it's more in the growth sector,
Walmart,
but like Verizon. Yeah, these guys get a bid when shit hits the fan. Like, they don't really get, like, if people are buying Cypher and freaking Iran and TeraWulf, they're not buying Coke, no matter how good their margins are.
All right, what about Chevron?
I mean, look, energy demand is another thing I want to talk about. I do feel there's going to be some players there, but
The Hess acquisition is not even felt in the numbers yet.
No,
People
I
don't
get it.
even realize that they acquired Hess and it just finished.
I agree with Austin saying 2026 could separate the men from the boys. I don't think 26 is going to be a walk in the park, dude. I think there's going to be you're already seeing it over the past couple of weeks. Freaking Nebius, 145 to 96, now back
Should
to
have ever
108.
been a 146.
Agreed. But the fragility of that stock over some hiccups in the data center space, and then boom, it tanks. Like, this could happen to a lot of, and you're telling me we're not going to have drawdowns in 26 with all this shutdown and midterm. Like, there's so many
I'm not
variables.
saying we're not going to have drawdowns. I'm saying the bigger are ultimately going to get bigger because nobody can compete with them.
Okay, so that becomes the real question. Can you just buy the NASDAQ and not care in 26?
As long as you're willing to take a 30% drawdown and hold through it and wait for a rebound, yes. Because if you're investing, you have to be willing to hold stuff when it hits the fan. Like, ultimately, we're going to have a bear market. Ultimately, stocks are going to go down. You don't want to be in companies that are already frothy when that happens. And look, we all know that most people are not going to cash because they never get back in at the right time. So you have to be willing to hold your positions.
Yeah. Also, for people saying this is bearish, we need to think a little bit. Robinhood's up 240% this year. It might be up way more than that by the end of the year. Is everyone expecting Robinhood to be up 240% again in 2026? Because that means this would go from a $130 billion market cap up into the 300s of billions of market cap. Maybe even more than that. So, like, are we just easily expecting? Yeah, sure, it'll go up. Like, this is my point. The reason I've really outperformed this year is because a hood's up 200% and NVIDIA is up 40%, but I got it when it was, in the DeepSeek stuff. Palantir is up 140%. If we don't expect that to happen again in 26, and maybe you do, that's fine. But then I would ask you, how do you expect them to add another couple $100 billion of market cap? Then no, there has to be a strategy, because then if it underperforms or it performs well, but not as phenomenal as it did this year, then you're not going to have the same returns. It's just that simple.
I mean,
that doesn't mean it has to be a fair market.
I mean, it's going to sound weird. You go buy TLT.
I don't hate that. I actually don't hate that at all.
I said that in a group text maybe last month. So, look, TLT is going to do well for two reasons. The Fed's going to keep cutting. Trump's going to put somebody in who's going to sway the Fed probably even more. The dot plot is probably overstated at the moment. And the bonds that are trading at a discount are going to they'll appreciate in value. And the bonds that TLT invested in when yields were at 5.5% are just going to get more expensive because they have a bigger yield. So both sides of their portfolio will do well in a rate environment that's lowering. So you could see TLT run 20% next year, maybe more. You look at a chart right now, it's already starting on its way up. TLT is the 20-plus year BlackRock bond fund.
Share my screen.
Yeah. Ooh, yeah. Amit, I almost spilled milk.
It's gonna happen. I'm telling you.
I almost spilled milk. Look,
it's only up 4%. If people don't remember, in 2020, bro, this shit was at 150. That's when rates were damn near zero. Now we're probably not getting to
150, but I could see it at 115, 120 by the end of next year, depending on how much they cut.
And that's a pretty good return / hedge.
And you're getting paid. What are you getting paid? 4%, 4.5% right now? You lock that in? What's the difference?
TLT gives you a yield too? I don't think.
Yeah. Dude, it's a bond fund. It gives you 4.19.
I did not know that. Wow. I didn't know that.
Yes, you did. You just don't remember.
No, I just thought it was inverse the.
Dude, you've been on too many conversations with Chris and I that you just not remember.
Oh yeah, you're right. You're right. I'm getting 4.5% on mine. Wow, I didn't know TLT pays you. Oh shit, that's actually not too bad. I was in TLT for a little bit, but then I got out of it. Yeah, I think it could be a play next year. Okay, but besides TLT, besides betting on rates in that way, I actually think the ciphers and Irens, I actually do think there is a world in which those guys double in 26, because if this data center stuff is not slowing down, I mean, those companies are only 10, 15 billion.
I mean, I will tell you that I do think Energy Transfer is a play, but I also don't think Energy Transfer is going past, on the high side, 25. I think Energy Transfer is likely to finish next year between 21 and 23. But it's at 16 and a half right now, paying you over 8% yield.
Yeah. I mean, look, ET is a good one. I
You
just
can't
don't know.
recreate their infrastructure.
ET's been stuck for a while though, bro. Last
And it's
year,
going to be stuck until the whole sector catches a bid.
I mean, look, if it's the data center plays, then I guess the smaller ones like a Nebius, if they get another Microsoft contract, that shit's going higher. Yep. It's just that simple. It's going higher. And so then the question then becomes, okay, like, can you develop a sizable position in Nebius even after this run? Like a hood, I don't think is going up another 200% next year.
I mean, I'll give you something else. I got something else for you. I could see this doing 16 to 20% next year, potentially. It's not interesting by any means. Realty income. Realty income could go to 60 to 70, and you're locking in a 5.3% yield, and it's raising the dividend every quarter, and you get paid monthly. In a world where the Fed is cutting rates, in a world where there's $7.48 trillion on the sideline in money markets, which does not include CDs or bonds, you're going to have a yield-starved environment for income investors. They're likely to go energy, utilities, and REITs when they come back into the market. Not exciting, but ticker O could go 60 to 70 and pay you a nice monthly dividend.
Why not just buy Verizon and collect 7%?
Yeah, listen, I like freaking Verizon also. I also like companies like AGNC. I mean, AGNC is a little bit more complicated, but that's
a 15% yield too.
Hold on.
It's a pretty good yield.
It is a 14.12% yield. Since I wrote my last article, it's up 4.78% with a total return of 6%. I wrote the article on September 2nd. And my main thesis is they're going to continue to have a strong rent roll. Originations are going to go up, and they're going to create a better spread. I mean, the housing market's going to become unlocked. The golden handcuffs are going to get taken off. So things like AGNC, where they predominantly invest in government-backed mortgages, I mean, it's interesting. They'll widen the spreads and increase the book value. So at that point, if you're locking in a 14% yield, you only need it to go up 6% to get to 20% total return.
Got an update from Trump.
Oh boy, what did he say?
Okay.
Is the market going down?
Guys, are we tanking right now or no? Let me see. No, we're actually doing okay. Okay. The Ronald Reagan Foundation has just announced that Canada has fraudulently used an advertisement, which is fake, featuring Ronald Reagan speaking negatively about tariffs. The ad was for $75,000. They only did this to interfere with the decision of the U.S. Supreme Court and other courts. Tariffs are very important to the national security and economy of the USA based on their egregious behavior. All trade negotiations with Canada are hereby terminated. Thank you for your attention to this matter.
He did not say that, did he?
No, he said that.
Oh my God.
But like, I don't think the market gives a shit. Everything's fine after hours. Nothing's like. Kind of petty though.
Can we have one night of just like not this? I don't know. I don't even know what to say to that anymore. So where are you looking at putting money next year?
I'm just reading this tweet. This is this is hilarious, bro. I don't know. I mean, I'm not giving up on Hood, Nvidia, and Palantir. And then, I think Grab could be an outperformer next year as well.
Here's the other thing. Are people really going to sell all these companies and freaking have to pay capital gains on their long-term gains?
No, the idea is not my point is not you should sell the companies and reallocate the capital. My point is, as people get new capital that they put into their portfolios, do they double down on those companies? Because if those companies do not continue to outperform, where's your alpha?
What time frame though? Like, is this a long-term mindset or just 1 year?
Oh, I'm just talking, dude. We are judged by your performance every single year as retail.
No, we're not. We're judged by other things. I don't care my performances in a single year.
No, yes, you do. You say you don't, but you would not be making stock market content every day if you didn't care about your performance on a weekly, monthly, yearly basis. Now, you tell yourself you have a long-term mentality, which everyone does, but nonetheless, you want to outperform every year. You attempt
Wanting
to
and
strive.
caring are two different things.
Potato. Like at the end of the day,
it's not potato. Wanting
it
and
is
caring are two different things. Do I want to have 1,000% year-over-year? Yes.
No, that argument doesn't. Then you wouldn't care about any updates that Nvidia is having. Like, you care about these day-to-day updates because you want to see the stock reflect.
Because I want to understand how it's going to impact everything. Long term.
Okay, because you care about the performance of the stock.
Amazon's going to be a $10 trillion company one day. That's a 4x from here.
Yes, but in the meantime, when your audience asks you, hey, Amazon's down 5%, Steve, we know you like Amazon. Why is it down? You have to analyze the short-term implication of what's happening.
Just like I did last quarter, because AWS's margin was not what the street wanted, and their operating income on AWS was not what it wanted, so it sold it off.
So my point is, you care about the impact in the short term. So all of us, I think all of us deeply care about, hey, how can we continue to outperform? Look, we're going to have 2022 types of years, and everyone's going to be like, all right, it wasn't the best year. But that doesn't mean you're not trying to mitigate that. You're not trying to hedge. You're not trying to navigate the year. Like, if you're in something super high beta, my point is, if 2026 is not the high beta year, maybe it's not a value year, but it's definitely not super high beta, robbing it up 300% type of year. How do you navigate that as you're managing?
Yeah, but you got to remember, I truly don't care when numbers go like this in my portfolio. Like, it doesn't impact me. I don't lose sleep over it.
No, but I'm not saying you lose sleep over it. I'm saying you do want to see every year some level of growth, and you are trying to get that.
Everybody wants to see that.
Yes. And so if everyone wants to see that, then you have to care about your performance. You don't have to be wedded to it and cry about it if it's bad, or go euphoric if it's good. But the point is, I think
we're saying the same thing in different ways.
My point is, if we want to outperform in 2026 and beat the S&P, which is what I think everyone's goal is, the question then becomes, do I expect Palantir, which is already worth $400 billion, to go to $800 billion next year? I know Dan Ives thinks that can happen. I don't know if I'm pretty confident that could happen. So when I have excess capital, do I buy more Palantir, or do I figure out how to use that capital in a different way? Do I just buy more Nvidia because one day it's going to 10 trillion? And I'm just like, all right, whatever, I'm just going to keep buying more. Or do I think maybe there's a better use of that capital in 2026? Because I already have.
If Palantir goes to $800 billion next year, I don't even know what I'm going to say.
I would be very happy.
I think a lot of people would be very happy.
But that's my point. It's like, we have to be somewhat also realistic and cautious of where capital should be allocated to next year Because 2025, quite frank, 23 was just the beginning of getting out of the bear market. 2024 was a little bit of a, oh, this AI thing is real. 2025, we've all really crushed it because a lot of, whether it was Matt with Rocket Lab or me with Hood or, any pick, Nate with Nebius, there's so many different names that have taken off. Everyone got to pick 3 or 4 names. Honestly, you could have picked 1 or 2 names, gone majority in, and you would have had a phenomenal year. My question is, can that be replicated next year?
Yes.
I don't know if it's that easy.
Don't be surprised if the freaking Spectacular 6 crush it next year.
No, they're going to crush it. But is Meta going to 4 trillion next year?
Meta could be at 1,000 next year. I don't know what market cap that gives it, but I would not be surprised if that happens.
Your Meta to 3.2 trillion?
Why
like
not?
Meta's going to add $1 trillion of value in 20. Well,
they just crossed over, generating over $100 billion of cash from operations. AI could be huge for them.
I'm not betting against Meta. I'm just saying in 26, I think there's going to be more challenges to picking stocks. It's not going to be a layup like it was in 25. Just 25, theoretically, I mean, you really could have bet on a lot of different names, and we did open doors.
Here's what we're going to do. We're going to have a New Year's Eve special, okay, where we have to pick a portfolio of however many stocks you want. It can be minimum of 3, no more than 10, call it. And you got to beat the cumulative average of the Spectacular 6, and you can't pick those names. How about that?
I feel like you just booked me for New Year's Eve.
I booked you for New Year's Eve. You're not going out.
Like, what if I got to go out, bro? If I got some plans for New Year's Eve.
You're not going out.
No, look, I think that's a good idea. I think we should have multiple of those sessions because all I'm saying is, I'm not trying to be bearish or trying to say the bull cycle's over. All I'm trying to say is Palantir went from 150 billion to 420 billion this year. To have that type of year again in Robinhood went from 30 billion to 130 billion. Like, to have those types of years again in 26, which is the real outperformance, it might not be as easy next year. Like it's going to be harder for Nebius to do well. They're going to have more expectations on them, right? Meta's up 22% this year. Like,
I'm going to
easily
say it now.
Another year.
The combination of Microsoft, Apple, Amazon, Alphabet, Nvidia, and Meta, the Spectacular 6, is not just going to beat the S&P. They're going to do 15 to 20% combined in appreciation next year.
So the Qs basically go up 20% next year. That's your prediction.
I'm not saying the Qs are going to go up. I'm saying that the combination of those 6 companies will be up most likely 15 to 20%.
Excluding Tesla? You're excluding Tesla?
Yeah, including Tesla on it.
So there is the Round Hill Magnificent 7 ETF. You can share my screen. That's 20% this year so far. You think this thing is going to be up another 20% next year?
I don't think anybody's competing with those companies. I really don't.
No, I agree. I don't think anyone's competing with them either. I just wonder, will their stocks appreciate at those levels, even if they keep putting up that growth?
I got a couple of dark horses for you. What about companies like Halliburton or Schlumberger?
I don't hate them.
I mean, we know that we need more wells. We know we need more oil. We know we need more drilling. Those companies should do well. Schlumberger is giving you a 3.25% yield. They're buying back stock. They're trading at a really low PE. You could see stuff like that catch a bid.
Okay, so I agree with that. What about BM&R? You think that has a massive 26?
It all depends on how quickly we get real stablecoin utilization. The way BM&R works is you need a lot of movement and a lot of transaction value with stablecoins, so Ethereum becomes a deflationary asset.
So, do we think BM&R is going up next year?
I don't know. I want to see movement on stablecoins. I don't know enough about when this is actually going to happen with stablecoin utilization, like really occurring on a day-to-day basis.
Yeah, I feel like BMNR is also more of a multi-year story as stablecoins and all those other elements continue to go higher. I don't know. I'm trying to think of different themes as well for 26 that people should really.
Utilities and energy.
Utilities have had the best year they've had in 30 years. So again, the
Only
question
going to get
becomes,
better.
well, how confident are you that it's only going to get better next year?
Well, let's see. It all started with, I don't know, Microsoft saying a $3 billion data center in Wisconsin and then changing their tune and going over the top and adding a $4 billion data center too in Wisconsin, and then OpenAI contracting 26 gigawatts of chips.
A lot of that could be priced in, dude.
No,
a lot of that.
Because none of those centers have even started breaking ground yet.
That doesn't mean they're not priced into the stocks. That
all the energy to build.
The reason utilities have, but the reason utilities have had their best year ever is off the perception that they have so much growth ahead of them because of all these data centers.
They're still, remember, they're still trailing the market by a ton, and they're looked at as a flight to safety. You're going to have yield-starved people coming back into the market, and if that capital was going to go into tech, it would have went into tech already. Still hanging out on the sidelines. Utilities can still run. Energy can still run.
Well, utilities are beating the market right now, so I don't know what you mean by that. Utilities are up 19%.
In the past 5 years, it's up. Utilities are up 40%. Look at XLU.
No, but I'm talking about this year. I'm looking at the same thing.
All right, year to date, they're up 19%.
That's beating the S&P, and if they end up beating the S&P,
that's not slaughtering the S&P.
Well, I would say 5% on an ETF level is definitely slaughtering. That's a big outperformance. So my question, and I don't know that much about the utilities in terms of the individual companies. I'm just saying perception-wise, for this to be up 20% and the S&P.
What about energy? XLE is only up 3.8%.
Well, so there's two things here. For the S&P to have the best companies in the world, and for it to be underperforming utilities, to me, potentially could signal that utilities are pricing in all the growth from all those amazing companies, Broadcom, AMD, et cetera, in the S&P, and that's why there's outperformance. XLE is different from the energy names that have been taking off because there's a lot of energy. Like, well, for example, is Constellation in XLE? Because Constellation's had a massive year, but it might not be in the typical energy ETFs.
So
you might be right.
Do you think 22.5 times earnings is expensive for a company?
It depends on how the growth rate of the company.
The only reason I say that is because NextEra Energy and Southern Company are both trading at 22 times or 22.5 times this year with growth. Like they've had a good year, but they're not that expensive. You know what I mean? Like keep in mind, they were deeply depressed. They were their equivalent, maybe not as much, but they were a tobacco story for a long time. There could be a lot left in that trade. You asked about CEG.
Yeah, how much is that up year to date? CEG.
Excel.
Yeah, dude, CEG is up 50%. I don't think some of these energy names that have taken off, and I'm talking about the legit energy names, not the like hypey ones. I don't think they're in XLE. XLE has a bunch of the Exxon Mobil's, and Chevron.
CEG is in XLU. It's the second largest holding. But keep in mind, it also has NextEra, Southern Company, Duke, Dominion.
So CEG is, that's my point. CEG is seen as utility. Yeah, Centrus Energy, Bloom Energy. These names are not in XLE. So
no, I mean, those are cashing a bid for crazy reasons.
No, some of those. Centrus is legit.
I'm talking about Bloom.
Bloom is a little less.
Oklo,
I don't even fucking know.
Why not?
I mean, that went from 195 to 125 in 2 weeks. No, but what if Oklo gets a $10 billion nuclear contract next year? Like everything changes, right? So this is why I'm saying 2026 is going to be a different type of year because you got a lot of different shit. Also, here's the other thing, and we need to talk about this stuff because we can't just assume everything's going to be perfect. What if there's hiccups in the data center build out? What if it's not being as effectively produced? What if companies are not easily licensing out the GPUs in a way that is meaningful enough? What if Google comes out and says we might not need to be using as much of these certain facilities? I'm not saying this stuff is going to happen, but if it does, it could wreck the entire structure of how a portfolio is set up if you're leveraged utilities and data centers.
You know what happens if that happens?
What?
If I'm wrong and there is no prisoner's dilemma, and you see one of those four pull back, and then the rest of them start scaling back, you are going to see a 30% correction in the market. Because there is so much leverage in these names
I don't
that
disagree.
stop losses will get triggered, and you're going to see a huge correction, and even potentially a re-rating.
I don't disagree. I mean, I said this on my daily recap today. I'm like, bro, if you're long the market, you have to believe OpenAI is going to win. Like, you don't even get to have an opinion on OpenAI. So everyone says, oh, I hate Sam Altman. Like, you can scream it as much as you want. If he doesn't succeed, whatever stock you're in is screwed. Like, genuinely screwed. Here's a stat. OpenAI or NVIDIA, Broadcom, AMD, and Oracle, their market caps went up by 630 billion collectively in the days after they announced their OpenAI partnerships. They all added $500 billion to their market caps for OpenAI just saying we're going to be doing work from you, not saying OpenAI has even contracted any of the revenue or the purchase orders, just saying, hey, we have a deal in place. If OpenAI doesn't win, and they need to win big next year, I think a lot of us are going to be in trouble. So it's kind of funny because it's like you almost have to, if you're in the market, you have to, you are almost forcing yourself to believe that this AI thing is going to play out. Which I think there's more than enough evidence to believe that there's a really good shot it does play out. But you can't really, unless you're in like Pepsi and Verizon, if you're in anything growth, you have to believe this narrative plays out.
Pepsi's actually interesting here. It's been bouncing off the bottom. I mean, admit we could just go buy Ferrari.
The stock?
Yeah, it's down 16.5% this year.
It's probably a phenomenal business. I just personally don't see the value in owning it because I it's gonna be a stupid reason, but I don't like luxury cars. Like
coming from somebody who owns a Tesla.
No, Tesla's not. I don't think of Tesla. It probably is. It qualifies. I don't think of it.
Like that. It is. It absolutely is.
I got it for FSD, but like dude, a Ferrari, you're spending $200,000 on a car. Like, like I don't.
200.
Well, it's more or less.
You'd be lucky to spend 200.
See, that's what I don't want to be long a company that requires that type of consumer to keep
No,
buying.
but you kind of do because you can't. You could be worth $500 million. Go walk into Ferrari. They're not selling you a car. Like you actually have to get qualified to buy a car from them. There's that much demand. That's why Jay Leno hates Ferrari.
Dude, Jay Leno's never spent his money that he made doing the Tonight Show?
Have you ever seen his car collection?
I've seen, yeah.
Well, is it him that hates Ferrari or Seinfeld? It's one of the two. It's probably Seinfeld. I think Seinfeld's a huge Porsche guy, actually, and hates Ferrari. It's one of them.
He's never spent his money. He only spent his comedy money. He's never spent his actual. So he probably has a couple $100 million just sitting there from the Tonight Show.
Dude, his car collection's worth a couple $100 million, it feels like. It's insane.
Okay, so here's the other perspective. Here's the more optimistic, super beta, high beta perspective. Rates are coming down to 2.5%. 7.5 trillion on the sidelines.
Yep.
Everything goes crazy next year.
Yep.
Everything. Yep. Ethereum, Bitcoin, BMNR, HOOD does another 150%. Palantir is up 70, 80%. Oracle's up 40%. Like that would be the scenario where I think all of us would just like have the best 2026 ever because like all of us, no matter what we own, we're just going higher. I wonder how easy of a, or how likely, probability wise, how likely do you think that could happen next year? 50, like if you have to put a percentage, probably you think it's 50-50?
Okay.
I'm putting it more. I would be. I'm not doing 50-50, but Trump is not letting a hawk be the Fed.
It's the freaking midterms. They're not letting the market go down.
Yeah, but the midterms.
I checked the Atlanta Fed today. They're expecting 3.9. And this is the Atlanta Fed. They were overly bearish last time around. 3.9% GDP growth in Q3.
I mean, look, if we get 4.5% growth, we're going higher. So, well, that's the other thing. If you think if Trump is promising a golden age and it ends up becoming a real golden age.
And let's not forget who's calling the shots on technology right now. This is a much different administration than other administrations that we've seen. Think about who he surrounded himself with Bissent, Sachs. I mean, I'm not convinced that technology is not going to do good over the next couple of years. We may have a correction, but I think it ultimately is going up.
I think it's hard to be bearish technology. These earnings that we're seeing, it makes it really hard to be bearish tech.
It's really hard to be bearish tech.
So it's just at what point does NVIDIA add another couple trillion next year?
Amit, they're not expensive companies.
I'm not saying they're expensive. I'm not saying they're expensive. I'm saying, do you think the market has the I guess excitement to give them even more than they've already given them? Like, I don't know. In 2030, you give them another couple trillion.
Sure, because the market's forward looking. Look, I know that you hate when I do this, and I'm going to take Palantir out of it, so I'm not disrespecting Palantir. Okay, I'm going to take them out of it. I mean, look at Meta. All right, are we saying that paying 26 times for Meta this year earnings and 21 times 2027 is an expensive company? Are we saying 25 times for Alphabet and 21 times 2027 is expensive? I mean, from Meta, Alphabet, Amazon, Microsoft, Nvidia, Apple, and Broadcom, they're all under 30 times forward earnings for 2027. That's not an expensive market.
No, I don't disagree.
Especially when you're seeing this type of growth. I mean, look at Broadcom. Broadcom's trading at 51 times this year, but they have 75% forward growth, and that's not including where this started or where the EPS started this year. I mean, it's just there's so much growth on the horizon that the street is factoring in that this does not look expensive, especially when I put Walmart in here. Because we all know how this is going to look if I put Walmart and Costco. So if all these companies are cheaper on an earnings basis than Walmart and Costco, are we in a market that's expensive?
No. I do not think we're in a market that's expensive. I also think, given the earnings growth I'm seeing already over the past couple of weeks, you can justify and validate the multiple on the S&P 500. And when you look at the earnings growth going into 2026, as you showed on that chart, you can say, yeah, Meta's not expensive. Google's not expensive. The broader question is, does the market have the fever to be able to say, hey, we are just going to keep making sure the rich get richer? And, that was, you and me kind of had the same thesis end of 24, which is that's going to happen in 25. And we had a little hiccup, but that's what has ended up happening.
But it's not even the rich getting richer because so many more people are exposed to stocks these days, even if it's just through 401ks. But look at this. This is and I'll zoom out first. This is the S&P 500 PE ratio historical chart, okay?
Yeah.
We're nowhere near where we were in 2020 and 2021. When you got to almost 40. We're 28. Is it high?
No, it's not
a little bit on an aggregate, but I don't know. It's not crazy.
No, 21 was stupid because there was no earnings growth. So it's just not, it's not even comparable. Yeah.
Right.
2021 was dumb. So I agree with you. Your point about people being more exposed to the market is also a really good point. As more and more people get in, like they're going to buy the companies they know, like Google, like Amazon.
And let me make this point real quick. There's more money coming into the market than ever before. because pensions are dead. They become privatized with 401ks and 403bs. So every 2 weeks, people that are saving for retirement, the main way that they're probably saving for normal people is through having money taken out of their paycheck and put into their 401 or 403b. And what are the most common investments there? Total market funds, index funds, and target date funds. Most companies, for people that I know that have these types of plans, the first time they log in, it's in a target date fund based on their age. What are the biggest holdings of these funds? The freaking Mag 7 are all in the top 10, mostly. Unless you're in a target date fund that is like a 2030 fund because they've already started the sliding scale toward bonds. More money comes into the market every 2 weeks, more than ever before, because less and less companies have company pensions. So there's also nowhere else to put money. Think about that. Most people don't own real estate as an investment. Most people are not out there flipping houses or buying rental properties. Most people get their investments from the market. So
you are preaching to the choir.
I'm not seeing a scenario where money coming into the market is going to stop. I mean, think about this. Anybody who's on auto in the chat, just say yes or no to this question. When April happened and the market went haywire down to 48.50, did you stop putting money in the market? Did it go into cash in your account? Or did you just keep buying whatever you were invested in?
I kept buying.
So I'm not buying it. I don't know.
So, okay. So you think 26 is just a continuation of 25. You don't really think there's some complex strategy that's needed to navigate.
Amit, think about this. COVID, the entire world stopped for 2 weeks. Now, some states were open, some were not. You and I live in an area that shut down. The market went down so much, and it was back to new highs in 6 months.
Okay, but that's also not a fair comparison.
No, but hold on.
We printed $7 trillion, Steve.
I get that. But if something dramatic happens, you think that they're not going to figure out a way to freaking fix it over 6 months or a year? A. B. Is there anything on the horizon that is as scary as what happened with the pandemic? So we get a 3 or 4 month correction possibly. So what?
Yeah, no, I don't disagree with that. My broader point was it's not about should we be afraid of a market correction. It's do we think these companies that have made everyone so wealthy over the past couple of years just continue? Like, let me ask you a question. Do you think Robinhood goes up 200% in 26?
No, but I was wrong in the first place, so don't listen to me.
Okay, so SoFi's up what, 80% for that? You think SoFi goes up another 80%?
I don't know.
SoFi year to date is up 98%. Do you think they double again next year?
I'll tell you this. The SoFi wrecking crew is not going to be happy about this. I think 45 is a big stretch for Noto's PS.
Really?
Yeah.
You think 45 is a big stretch? You don't think that's reasonable for next year?
I didn't say reasonable. I said I think it's a big stretch. I think 35 is way more likely.
Oh, wait, you're talking about June 26 for his PSUs.
Yeah.
Yeah, that's you don't think they can move 50% from here? You don't think the stock can go from 28
I don't think it's realistic.
Really? I actually disagree. I think it's very realistic. I mean,
if you think it's realistic, then buy a bunch of it. I mean, because I got news for you.
I bought yesterday. I mean, like,
did you really?
Yeah, I bought. First of all, the chat basically.
We're going to the moon. I may buy more.
Or maybe not. Who knows? But no. But look, rates are coming down. Galileo's scaling. Noto already said that Q1 26. Okay. Crypto's back. Options are back. I mean, Tanner said they're going to get a freaking million members. And you know, if they get 1 million members this quarter, they're not going to have another quarter where they don't have 1 million members. That'll be.
We don't know that. I mean, you have football season right now. You don't know that.
I don't think 44 is as crazy as you think. Or 45.
We'll see. I mean, look, it would be great for me if they hit that, but I mean, I don't.
But okay, so to my point, let's say, okay, so if SoFi does, so how many people in the chat, have made ridiculous amounts of money on SoFi? those people that are outperforming the market this year, if SoFi doesn't make the move that you think they can't make, that's underperformance relative to the market next year on the one name that carried them this year. This is my point. If you've been carried by a couple names like me this year,
yeah, but keep in mind,
what if those
28
names
to
don't carry you
35
next
is
year?
not underperformance. I'm just saying it may not get to 45 by June.
No, but my point is it's up 100% this year. Let's say it's up only 20% next year, which is still be a really good year, but that's not up 100%. So everyone's, a lot of people saying yes in the chat. A lot of people are freaking on these options, these $10 calls for 2026. So if you sat back and said, I'm not going to do anything other than DCA into SoFi, in 10 years, you're probably happy. But in 2026, if it's only up 20%, only being relative, you're not going to have massive outperformance.
Yeah, but what we've seen is not normal.
Well, no, but Steve, you just contradicted yourself. What you just said, everything's going to continue in 26, and now you're telling me it's not normal. Like, what do you mean?
What's not normal is stuff going up 100, 200, 300% a year. That's not normal. That's not the companies I'm talking about.
Okay, but then hold on. The NASDAQ going up 20% is definitely not normal either. So why should that continue in 26?
The NASDAQ not going up 20%?
The NASDAQ does not compound 20%. If SoFi's up 100, it's probably because the NASDAQ is also up 20. Like if the NASDAQ's not up 20, SoFi, Hood, Palantir, these guys are not, these are all relative to the biggest companies in the world. Like it's very hard for NVIDIA to be flat all year, but SoFi to be up 100%. Just the market environment, no matter how good SoFi's earnings are not going to be buying names.
There's a lot of years in recent time where the NASDAQ's up a lot.
Okay, how much has the NASDAQ?
I'm bringing it up. Hold on. So going back to 2012, just coming out of the crisis, right? 16%, 38%, 13, 5, 7. Then you get into 2017, 28, -4, 35.
I'll give you the answer. It's 10.4% over the past 30 years.
Yeah, past 30 years, you can't use a 30-year number.
What do you mean?
It's a completely different market than it was back then.
No, I'm saying over the past 30 years, including
I'm just saying that if you look at recent history, with all the technology that is now happening, you have a lot of years where it will have been up, excluding 2022, 20% since 2019. Because this year,
you can't exclude the bad years to make your number. We're talking about an average compounded annual growth rate.
Drawdowns happen, but the NASDAQ, I don't think 20% is a crazy number on the NASDAQ.
No, but hold on. I'm giving you the exact data. We have CAGR 10.4% over the past 30 years. So when you're telling me this 100, 200, 300% name on individual stocks is not normal, I agree with you. But then you can't tell me 20% is normal.
The 2000s were a completely different era. Take the bubble out of it. The end of the Bush years was a completely different era with really not a lot of growth. None of this stuff existed. Smartphones didn't exist. Cloud computing didn't exist. SaaS didn't exist. None of that stuff existed. This is a completely different market. It's very hard to look at what's happened over the past 30 years when the market dynamics have changed so much.
Okay, so then you're switching your argument. I just want to be on the same page. Are you saying 20% for the NASDAQ, you can get rid of the screen, is normal?
What I'm saying is I think 20% is not going to be uncommon going forward in years when the market is up.
You're saying when we have a bull market, it's great for it. It's common for, of course, it's common for us to go up.
It is not going to be uncommon for the NASDAQ to be up 20%
my
when the market is
entire
up.
point of bringing this up is to go through an intellectual thought project on, hey, if 26 isn't as fun as the past 3 years, then maybe people relying on Hood, SoFi, Palantir, NVIDIA, Rocket Lab, Amazon for the massive outperformance they've had is not going to be that easy.
Yeah, I don't think those companies are going to outperform the same way, but I think there's going to be a lot of companies that outperform. The Spectacular Six, companies like Pepsi, Coca-Cola. I think a lot of those high flyers are going to have a difficult 2026. But that doesn't mean that the market's not going to go up.
No, I agree. I think the market's going to go up. But is the market going to go up 20% on the NASDAQ, on the biggest tech companies in the world?
In
Like
2026, I could see the NASDAQ up 20%.
I could see it up there too. But my point is, if we assume that's a normal thing, historically, that's just not. We are in a very, very incredible time to be alive. And so we also have to be, prone to the fact that there is reality that could go the opposite direction.
Oh, it could absolutely go the opposite direction, Amit. But the bottom line is we're in a much different market with much different verticals. And these companies are producing more profitability at a quicker rate. And what happens when the CapEx spend goes from boom to maintenance? And maybe NVIDIA takes a little bit of a hit, but every other company increases margins and just spits out way more cash and more profitability. You're going to see another renaissance of earnings. Keep in mind, this is a build-out phase.
No, this could be the roaring 20s.
Crazy part.
This could be the roaring 20s, and that means there are the next 5 years of just, as you said, potentially 20%.
I sound really bullish right now because I truly believe Dan Ives is wrong, and it's not 1996. We haven't even gone to dinner yet. It's not 9 p.m. and the freaking party's going to 4 a.m. I'm telling you, it's 3 in the afternoon. I've been saying 1989 for a while because I really do think there's going to be retracements of 20% here, 15% there. But I do think that we are going to be in a golden age of growth. I really do.
Yeah, and look, if we get 20% retracements, those are dude, a 3% drawdown created the biggest stock market inflow 2 Fridays ago, October 10th.
The market goes down 10%. You watch how quickly money comes in from the sideline.
Yeah. Well, I think that a lot of that money's waiting on the sidelines.
And keep in mind, everybody is still putting in through their 401ks. Everybody's still buying. So people should not be worried about the market going down 10%. They should actually want that to happen to some degree. If you're retired, obviously you don't want that to happen. But if you are a long-term and you have 20, 30, 40 years ahead of you, you should want to be able to buy stocks at a better price.
Yeah, we were at extreme fear yesterday.
On the fear ingredient. Which is crazy.
No, look, I agree. Again, and I'm pushing back here and playing devil's advocate to kind of like poke holes and kind of get us all to think. But if the earnings growth continues the way it continues, 26 is likely going to be another good year. I don't know if like the Hoods and SoFis of the world are going to have this type of outperformance because you need a really hardcore bull market. But to get growth that all of us would be happy with, even if we just bought the NASDAQ, you just need these companies to keep executing.
I will tell you what will derail the market, okay? If unemployment keeps going up.
I knew you were going there.
And if you have a big scenario that very well could play out where our elected officials do not figure out what to do and unemployment hits 5, 6, 7%, and it doesn't look like it's going to reverse, we're going to have a very big problem. Now, that may not impact the largest companies that much, but it's going to impact the broader market and it's going to impact the economy, and it's going to be a very difficult environment. Unemployment is the one thing that scares the hell out of me because I do think that a lot of jobs are going to be at stake when it comes to the efficiencies created by robotics and AI. Look at Amazon, 600,000 jobs by 2030, they said. That's scary as hell. Amazon is what, the second largest employer in the country behind the government? It's Walmart and them.
We're not talking enough about what they say. And, here's another thing. I don't think a lot of people went this deep into it, and I forgot to cover it on my show. Amazon has already started preparing the marketing material for how they will externally communicate. This was talked about this morning in some of their leaked memos about automation. And one of the number one things in their memos, if you read them, is to not call it automation. Guess the word they want to call it instead.
I don't know. What do they want to call it?
Innovation.
Retooling? Oh, innovation.
Because if you say automation, everyone like this is negative. Oh, they have this. They're automating humans. Like the fact that they're preparing, and this is a really important point because if Amazon's preparing how to communicate with the public around robotics, that means they know it's happening. They absolutely, and this is why Amazon's a buy right now. Because if they save the amount of money that Morgan Stanley thinks they can save, which is $4 billion a year on automation, that EPS number is going to the moon.
You just said what I said when you weren't here at the beginning of the stream about their operating margin potentially going from 11.2 to 20% over the next 4 years as their revenue goes to 1 trillion, making their operating income over $200 billion.
And by the way, that goes to your point about the rich get richer. That goes to your point about the NASDAQ will keep doing its thing for the next few years, because we have never seen in history a company save $4 billion in 1 year off of a decision that is rooted in technological innovation like AI. I mean, obviously we've seen the internet save and create all these types of prosperity, but in this day and age, to be like, hey, Wall Street, yeah, next year our costs are going to go down by $4 billion. That's not happened. I think like at least
guess what? 4 billion maybe at a zero. Want to know why? They're selling general and admin expenses $160 billion in the trailing 12.
There you go.
160 billion. You're telling me they're not looking to shave 10, 20, 30 billion off that number?
And if they do, the earnings per share, like there will be a quarter one day where what do you say?
It's going to explode.
Everyone will be wondering, how do I not have Amazon in my port if that actually plays out? But like if they get anywhere near 10, 20% off SG&A.
Remember, I said Amazon has the ability to become the first $10 trillion company because of this reason.
I've been buying more.
mean,
but like so if now, so let's say next year, best case scenario, they save a couple billion and EPS goes up like 10, 20%. The jobs argument. Do you like when 600,000 people lose their job?
Picture?
Go ahead.
This is going to scare the hell out of the chat. You've heard some of it, but compound everything into one. Tesla gets full self-driving approved. It's in all the major metropolitan cities, and over the next 5 years, it's nationwide. Over the next 10 years, they have their semi up and running and doing everything. You have an army of Optimus bots, you have figure bots, you got all these different robots. Now it's 2035, and the next 5 years, you now have very limited jobs where people are driving, from deliveries to Uber, and the deliveries now have Optimus bots or figure bots in the back of the truck or in the seats, and they're the ones that are unloading everything. You now have full automation from robotics in McDonald's, Burger King, and they're doing everything. And it's all people behind the scenes controlling it and just making sure things are going okay from a command station somewhere. You now have 2035, the companies have the bots that they need. You now have them in homes. You now have other jobs such as landscaping, all that stuff. Bots are doing it. What are you doing with all these people? You're not going to be able to create enough jobs for these people. And that doesn't even include back office services, finance departments, HR departments. You're going to have a lot of accountants. I mean, I think the accounting industry is going to be difficult. I think that you're going to have eventually, maybe it's 2040 or 2045, humanoid robot doctors and surgeons. Like we could, in the next 15 to 20 years, see a completely different world than the one we're living in now. And if they don't figure something out, I don't know what's going to happen. But how's that for freaking painting a dark picture? That's somewhat reasonable.
Well, what's the likelihood you think that picture coincides with all the things you talked about in the next 4 or 5 years, if you had to give it a percentage?
I mean, I don't think it's going to happen that quick, but I do think 15 years, it's going to be vastly different than what we're seeing.
So you think in 10 to 15 years, that like reality will be that most of those jobs are gone?
I would say a lot of jobs are gone. Now, maybe we're going to figure out a way to build new jobs or do other stuff, but I'm sorry, you can't convince me that we're not going to have full self-driving. We're not going to have robots unloading trucks and robotics doing everything in factories. The rate of expansion with AI is going to make the past 10 years look like we were in the Stone Age.
I agree. Someone in the chat said Amazon spends 100,000 per employee. So if they get rid of 600,000, they'd save 60 billion. So what I'm looking at online is the average Amazon factory worker employee is 40 grand. So it's likely not 100. Maybe add another 5 grand, 10 grand with benefits. So you're looking more at like 20 to 30 billion, but still that would be a massive amount. Now they're going to have to spend that money on the robots as well. So you have to cut that from it. But net, it's at least one could argue 5 to 10 billion. And if that accelerates every year, the people that actually own stock in a lot of these companies are going to be the ones that benefit.
And look, again, an interesting play, Matt. It really is. You start tearing apart their income statement, their operating expenses. This is not cost of revenue. Their operating expenses is $256 billion. They're spending $95 billion on just R&D.
And they don't, Amazon doesn't buy back stock.
Where do you think that freaking money is going when you're spending $95 billion in freaking R&D?
That is going to be how to automate. 100%. Most of that's going to robotics. I mean, that has to be their clearest ROI that they see. So, I mean okay, so
you're telling me you're not going to be able to upload all of your tax forms and have AI do your taxes for you? Are you going to need an accountant in 5 to 10 years? Like, seriously?
No, I don't. I think Robinhood will come out with something that allows you to file your taxes. I think there's so many ways this stuff gets automated. So many.
And think about how many taxes are. Think about consultants. I mean, I'm just saying that there's a lot of things that are going to be very impacted. I mean, we have to be ready for this.
So going back to so let's conclude that initial question I asked. Let's narrow it down to 5 companies. You have $100,000. You have to put 20,000 in 5 companies starting fresh in 2026.
For a year?
Any 5 companies for 1 year. We're concerned about 2026.
Yeah. Amazon, Nvidia, not changing those.
Okay.
I'm going Meta also.
Okay. I don't think I disagree.
In there.
I wouldn't pick Salesforce, but I picked the first 3.
And I'd consider Microsoft.
Okay, so you have 4 big tech and then 1 dark horse.
I really think big tech's going to get bigger.
You're setting and you're expecting from that minimum 20%? Like you would be comfortable saying, I think it'll do 20% for the year?
I think the combination of that has the potential to do 20%. I mean, I would probably take the dark horse out and throw a Broadcom in if I really wanted to be safer. But yes, I'm for 2026, I think the big tech names just get bigger because they're all going to continue to expand their EPS.
You left out Google. Would you replace Microsoft with Google?
No, I put Alphabet in there.
Nope.
Alphabet, Amazon. Oh no, I didn't.
Amit will pick Palantir.
Yeah. So let's do this.
If the rich get richer, maybe we just go with the OGs.
Yeah, I'm going. I don't think the ChatGPT freaking browser is going to displace search. So.
Oh wait, can we listen to this? This is a 3-minute. This is our boy Josh Brown. He has a new stock pick.
Oh, does he?
He does.
You know I love Josh Brown.
I know you love Josh Brown. I think you're gonna. Okay, before I share it, I wonder. I'm gonna guess. This is hard to guess.
I need 30 seconds. Hold on.
Okay, take 30. I think he's gonna. I want to say disagree, but Steve loves Josh Brown. I think Steve is gonna listen to him sweet talk this stock, and Steve's gonna be like, "Well, I think he has a point, and if this happens." But then again, it's one of those names that I don't think Steve would ever buy. My 5 picks, I don't know, dude. I think I agree. NVIDIA's got to be there. I'm liking Amazon a lot more, especially because Amazon hasn't moved over the past year. By the way, markets are up after hours. No one cares about this Canada shit. If this was another country that started with a C, if this was China, I think we would have an ugly start to Friday. But it's Canada. And because it's Canada, no one cares. At least the market doesn't care. Okay, let's see what you think. I'm not going to tell you the stock. I'm going to let you listen to it and then give us your thoughts right after. Share the screen.
Before I bring it up, you know it's going to be very exciting for the next 20 years? We're going to get RoboCop. Have you ever seen RoboCop, Amit?
Of course I've seen RoboCop, dude.
Of course
you think I'm some uncultured freaking 1987 classic, 7.6 out of 10 on IMDb. Who's Peter Weller?
Oh, man. All right.
Okay.
I'm calling it because Josh Brown has added a new stock, and it is Zoom. You've talked about this before. Maybe you've even owned it in the past.
Oh, yeah.
But why now?
Me and Zoom go way back.
Yeah, why are you
I promised myself
this romance?
I promised myself I would never do this
Pause.
again.
Pause.
So of course I did it.
Pause it. I have not seen this. I'm going to make a bet. He says something about their phone offerings. I'm going to bet that he's going to say they're going to become a huge VoIP player, blah, 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 offerings with it, roll it. I'm going to make that bet right now.
Okay.
This is the story of Zoom as I understand it and as I believe things to actually be. This is a company that we use at our firm, Ritholtz Wealth. There's an SEC regulation where financial advisors and other staff are not allowed to use their personal cell phones to call clients or to send text messages with clients. So everyone has to have their own phone number. And this sounds obvious, but during the pandemic,
You got the first part. Part.
I'll tell you why. Because I'm not going to get into the whole thing, but I have my office phone. So Zoom probably has an app the same as the app that I have, because I have VoIP for the company, and everybody who has a phone also has the app because it's part of the suite per person that they put on their phone, and they can turn their cell phone. So I can turn my cell phone into my office phone by just clicking the app. And if I was to call you, it would call you from my office, not my cell phone number, even though I'm using my cell. And Zoom is trying to differentiate from Teams, and they're adding this whole big suite. I already know everything that they're doing. I've already looked into it. But I looked into it not for investment, from business reasons.
a lot of Wall Street firms got in big trouble for using their personal communication. Now, you can understand why. They were all sitting at home and nobody really had a plan. Zoom's got an enterprise business where they give you phone numbers that you can use. It's an app. All of our employees use it. So that's what got me curious. I wonder how successful this product is, because that's our telephony provider. And they just announced that they now have 10 million users of Zoom Phone. The reason why this matters is because the problem with the stock for the last 4 years since the pandemic is that everyone looks at video like it's this commodity thing, like, oh, big deal, Microsoft Teams, Google Meet, it's all the same. The truth is it's not all the same. When an enterprise adopts Microsoft Teams, the salespeople flip out because all of the customers they want to call on prefer Zoom calls. Zoom is easier for everyone. So they sort of have an edge in a business that people think is commoditized. Okay, put that aside. If they can build out this enterprise business, of which telephony is only part of it, that's a really big deal. We have now adopted another product that they use called the Zoom Revenue Accelerator. That's AI, note-taking AI, which of course other firms have, but it's becoming so good and so important to my organization that I can't imagine that's not the case for all of their other enterprise customers who are currently using it. I think there's going to be an inflection point where finally they're able to show some growth away from just the video calling. It could be this coming quarter. They're going to report on November 24th. Could be next quarter. Not 100% sure. But the great thing about Zoom is because there's no growth here, and it's just been kind of flatlining mid-single-digit growth, the earnings multiple is 18 times. I'm getting a discount, obviously, to the tech sector, but to the overall S&P, with the potential that they will figure out a growth strategy and it'll finally click. The company's got $8 billion in cash on the balance sheet. They can make acquisitions. They can continue to buy back stock. They can do whatever they want with it. And I think that the risk here is minimal compared to the potential upside if and when they actually hit it.
Why haven't you seen the growth then? If they have this
they can't
amazing,
grow.
Well, why?
Because
and why are you going to pay 18 times for no growth?
I'll explain it to you. Because if and when the growth shows up, the stock will get a re-rating. Morgan Stanley just initiated coverage this week, and that was actually their argument. Basically, you're not paying a premium for anything here. You're paying a low multiple relative to other communications and technology stocks. But at a certain point, all of these other enterprise businesses that they've gotten into, if they can start showing actual growth, all of a sudden, this is a stock that people have to think about differently. I wouldn't be shocked if they finally post a growthy quarter or a growthier outlook. This could be $100 in the blink of an eye. Nobody owns it. Nobody owns it. The last thing I want to say here on the buyback or on the flexibility of having $8 billion in cash, one of the problems with this stock, they did all this hiring in the post-pandemic, like every other technology company, and they did something that was really generous for employees, but it screwed up the stock for 2 years. In other words, if they hired an engineer, they said, we're going to pay you $500,000. $200,000 of that is going to be in stock options. Then the stock falls 80%. Mm-hmm. So you either lose the employee or you top that employee up. They chose to top the employee up, give them another $200,000 worth of stock options. That stock option compensation problem has been an overhang on this stock. A couple of quarters ago, the CFO came out and said, you know what? Wall Street is telling us to knock it off. We have to stop diluting the shareholder base. We have to start focusing on shrinking the share count and being a little bit more shareholder friendly and a little bit less employee friendly. I think that's a very smart decision, and that's another thing that could end up showing up if and when the next time they're able to report it.
Okay, so we'll watch it, and if anything, it's a little bit of the flavor, if you will, about what we have coming up today. We have a number of moves.
Yes or no? Do you think
No.
it's a solid case?
No. So he makes
he didn't sweet talk you enough to think there's a shot?
So here's why. He makes a very good, compelling case if they show growth. It could double because it's trading at such a low valuation that if they do something right and gain momentum, this is something that's just going to go, go, go. This is the problem I say. And I'm trying to be as realistic as possible. The majority of meetings I get, and I'm not talking about internal because we're a team shop. The majority of external invites I get to meetings are on Teams. I do not see Google Meet, and I do not really see Zoom. Zoom is maybe 1 in 10, 1 in 8, maybe, for external meetings. Everybody is using Teams, and Teams is just a better now, this is where I get into opinion, that Teams is a better platform than Zoom. But the problem is Zoom has had a unified phone platform for years. This is not something new. Their revenue is not freaking doing anything. It's still stuck between 4.3 and 4.8 billion for the past 4 years. I'm not seeing it. No. The problem is Teams is such a good product and everybody is so used to it. And because companies are either buying the Teams license or a Google license, there's no need for Zoom because it doesn't have the rest of the products. It doesn't have an email server. It doesn't have Word. It doesn't have Excel. It doesn't have Project. It doesn't have any of that stuff. The Google Suite and the Microsoft Suite just have so much more. Companies are not spending for secondary video conferencing when Teams and Google Meet come with a package. It just, I'm not buying it. If anything, I think Zoom's going to get acquired by Alphabet to compete with Microsoft.
I agree. I don't like Zoom. I don't like. He makes a compelling case, but Zoom has had 1% growth for the past 3 years. I think it got to like 4% a couple quarters ago. And I know his thesis is there's going to be more growth, but like, yeah, if any stock shows more growth, there should, but why would you want to bet on Zoom out of all? Like, if you're betting on a name that hasn't grown for a long time, you're betting on a re-rating, as he said, you've got to bet that there's some explosive catalyst. As you said, Teams
There's
is still
nothing that they can do. Look, here, the bottom line is you have to pay per person for Alphabet or Microsoft. With Microsoft, it's an E1, E3, E5 license. I think they also have an E7. Alphabet, I'm not sure what the structure is, but you have to pay per person. Zoom does not have all the other things. Now, you need all those other things. So you're starting a company, you have 100 people in your company, you're either getting 100 licenses with Google or 100 licenses with Microsoft. You're not paying for Zoom when you already have a meeting platform in that you can already share all your internal docs with. It's just not happening, especially since both of them have calling options.
Yeah, I don't.
Microsoft also has an upcharge where you can add external calling to Teams. I mean, I already call my coworkers and I, we all video call and audio call us through Teams half the time instead of calling the phone. Because in Teams, you can see if somebody's online or not, and you just hit call if you want to talk to them instead of sending a message. They're up against two giants. It's just they don't have. Look, you have an email server. You have an email account. You use a spreadsheet. You can't do that with Zoom. So if you're buying a software stack for your company, you're not going to add another cost with Zoom.
And you don't think the note summary part of his thesis?
No, they have that with freaking Teams.
Yeah, they have that with a lot of stuff, to be honest.
They have all that with Teams already.
That's why I like. Sometimes Josh comes out with these arguments, but I'm like, note summaries and freaking phone calls. Is that really enough to re-rate a stock? Like, it felt like a stretch. Even though it sounded
correct. I think it's an acquisition target, if anything, to gain the infrastructure and the clients. Because I will say, I think Zoom is a better product than Google Meet. But I mean,
Zoom is the best product. I still pay for Zoom to this. I paid
do
for
you
like
use
4 years.
Teams?
I've been on Teams calls before. It is a ridiculously, I would say, like, I don't even know if horrible is the right word. It's just not a good experience.
People like Zoom for very big calls. I like both products. I think Teams is a great product.
Look, I've never set up a Teams. I've joined a Teams. I don't like it. Zoom I've used for a long time. But just because I use it for that one use case doesn't mean I think it's a growth stock. Also, it's a $25 billion market cap, so Microsoft could take them out tomorrow.
Alphabet should take them out tomorrow and replace Google Meet with freaking Zoom and just add all their accounts onto their stack.
Would you really want Sundar to spend 30, 40 billion bucks on Zoom, though?
I'm not saying I want him to, but it's smarter than Microsoft buying them.
Because you think they'll be able to compete with Teams better,
It'll allow that. It would. So from a strategic aspect, 25 billion to Alphabet is a quarter of freaking operating income. And
no, but they're not going to pay 25 billion. They're going to have to pay a premium.
No, just I get it, but just roll with me for a sec. It's an investment in the future that they're really going to beef up their offering with Google Suite to really try to compete with Microsoft Office. Because look, Google Suite is inferior to Microsoft Office.
I agree, but they would have to pay 40. They're not going to get it at
keep
20.
in mind, when I say Microsoft Office, I'm not talking about the home version that you get. I'm talking about SharePoint. I'm talking about all the corporate stuff, the bells and whistles. That makes Microsoft a lot of money. SharePoint's amazing. Implementation is a little tedious with moving all your stuff over and getting all the pathways set up. But once it's set up, it's freaking amazing with the internet and everything. Like, it's great.
Should Apple buy Zoom?
No.
Yeah, that would not be the best idea.
No, because Apple doesn't have their own suite of products. Like, no, be a dumb way. It would be a bigger waste of money than their car division.
Yeah, I agree. I thought it was a compelling argument, but it's hard to buy Zoom here.
No,
Some of these Silicon Valley companies, Zoom, Airbnb, like they just haven't been good performers at all.
No, I'm not excited about those.
Hotmail should buy Zoom. See, again, the problem is what premium do you pay if you buy Zoom? Because, like, I don't know if it's worth $50 billion, but shareholders are going to want some premium after being flat for the past couple of years. That stock was at 500 at one point. That was COVID time. That's why when everyone says we're in a bubble, it's like, dude, during COVID, Zoom was a $500 stock. It was a freaking, basically $120 billion company. Like, what are we talking about? I don't think you see names in this market. You see names that are expensive, but not to such an extent, so egregiously expensive. Yeah, Enphase back then. It's not the same now as it was back then. This Canada stuff, no one cares about it, dude. Market does not care about this Canada news.
Good.
Like, we're higher than where we were when the news came out.
I'm glad that the market doesn't care.
The market's like, if it was China, we would have it. It's Canada. It's our friendly neighbor. He'll figure it out.
They'll figure it out.
He'll figure it out.
I didn't even realize it's 11:51. Amit.
Yeah, I think I'm going to go to bed.
Yeah. I do want to say thank you to everybody. I'm going to answer some of these real quick. Thank you for all the super chats. I mean, I'm sorry, I'm not going to say I love pineapple pizza. I'm just not.
Dude, pineapple pizza sucks.
Amit, there you go. Happy birthday.
Yeah, it's my birthday.
Happy birthday. Happy birthday.
Dude,
Amit, favorite chip? What's your favorite chip?
The purple Doritos.
I'm going to say I think when push comes to shove, original Doritos is still the head.
It's not a bad one.
I struggle to eat at restaurants. I mean, I don't. Take my bucks before they're worthless. Thank you. No one should care about yearly return. We are in here for the long term. If we cared about year to date, we wouldn't be DCA and Palantir for 2 years, just pile cash. That's not a bad point.
Okay,
if you and me cared about total return, we wouldn't have kept buying PLT.
That's not the point. That's a fundamental.
I know that's not the point, but I'm going to roll with it.
If that's the case, don't even watch investing content. Like, what's the point? Like, I hate when people make this up. Everyone cares about your performance. You can't let it become something that. What do I think if Kamala won? Then we would all be caring even more. We would be caring even more about her lack of performance in the market.
I don't want to get political on this. I don't even know what Path is.
Path is robotic processing automation. It's not that exciting. I have looked into it a little bit more. I mean, you could do a deep dive on it if you care about it. It's just not. The stock's gone up. That's why people are interested in it more. I don't know if the earnings growth is that exciting, but in general, dude, everyone psychologically cares about your performance. That does not mean you should let it define you. But I think it's also irrational to say you shouldn't care about it because you have to keep an eye on how you're performing. If you don't, then you literally should just buy stocks every month and not consume any content about the markets, because what's the point if you don't, quote unquote, care about your performance? Everyone cares about it. It's inevitable. You're going to care about it. To buy Palantir at $6-7 We had to care about how the stock was performing. We had to care about the progress on the company. You had to continue to get updates on this stuff. We're all junkies. We all care about it every single day. And so, yes, it cannot be the only thing that defines like your happiness, even though unfortunately we let it do that to us. But it's unrealistic to say you're not going to look at your month to date, your year to date, your week to date. You're not gonna, like every single week on my market close, we do an update on your year to date because everyone wants to keep updated and be accountable as well. Like you have to you're managing your own money, hard-earned money that you are allocating in the equity market. You're telling me that doesn't deserve you being accountable to care about how you're performing every single month? No, of course it is.
So I'm going to plug a couple of things. One, if you're not following Amit, please go follow him. He makes incredible content, and I actually can't believe how good the content is that he makes, and his interviews are freaking great. So go follow Amit if you're not following him. Go follow Tanner, Matt, Tevis, Chris, Cashflow Chronicles. They all make great content. So I think that if you like this, you would like those. If you're into alternative assets, I have an interview on Sunday night that you may be interested in. It's probably going to be 9 p.m. Eastern. Ty Wilson from Chasing Cardboard is coming on. It's going to be really interesting. He runs a huge nationwide sports card business. The show Chasing Cardboard is kind of like American Pickers, but with sports and TCG cards. Absolutely phenomenal. We're looking forward to that. And Saturday night with the boys is going to be interesting. We're going to have some tier lists on Saturday night. It's going to be fun. We'll try to get Amit on for movies, even though he's going to be out on a date.
No, it's not a date, but I have. I'm going to be with my family because my birthday weekend, so definitely would be gone.
Yeah, so here's the link. I'm looking forward to this interview. It's going to be interesting. And Amit's morning show. I mean, listen, he gets more viewers than most live things in the morning, and he just makes great content. So go follow Amit. It's really awesome.
Who are you interviewing on Sunday? Oh, it's the same guy?
Ty Wilson.
Oh, that's going to be a good one.
From Chasing Cardboard. It's going to be freaking incredible. Yeah, I'm excited because, look, what happened today is just, I'm going to bring it up real quick. Freaking Dave & Adams is a very big sports card store, okay? Very big. Remember, these boxes I'm about to show you were selling for $225 in the pre-sale 2 weeks ago, okay? $525. That's more than double from the pre-sale. And it's the same with Steel City Collectibles. eBay's going up. I mean, eBay's up to $380, but you don't even know when you're getting it. I mean, luckily, my buddy got me 2 boxes at $230. The shop that I get all my stuff from, they don't have a Topps account. They were buying it on the secondary. I couldn't even get it. They wanted to charge me $430, and I do a good amount of business with them. So the restock on this is going to be more expensive also. So I don't even know. I was planning on ripping one of these boxes over the weekend live. I don't even think I'm going to now because I think I'm just going to keep them as sealed right now, and we'll see what happens. But the whole sports card and TCG market is just continues to go up, and these really are alternative assets.
I think what you're doing with Alternative Asset Weekly makes a lot of sense because look, we're talking about performance every year, right? 2026, if the sports card market heats up, Pokemon market heats up, that could be a place where people get alpha that maybe is a bit less risky than buying some of the high flyers.
That Jeff Wilson is now openly going to public equity to raise money for more shops. The fact that Tom Brady owns 12 card shops is nuts.
Oh, did you? I don't know if you listened to the clip I sent you about Ryan Cohen, but he was on an interview. He said our card business has more demand than supply.
Yeah.
He's like, every single piece of inventory we get, we're selling out immediately.
Have you even seen GameStop's website?
Yeah, I've seen it. It's become a trading card company now.
It's all trading cards.
Dude,
I mean,
Steve on my show. This was May of 24. I remember you came on the market close. You said, I have a
look at this. This is their
wild
freaking
idea.
homepage.
You literally said they will pivot to this. And you were right. Now, the stock hasn't moved, but you were right about what the company would do. And
I mean,
it looks like they did it.
it
Who knows, bro? They still have $8 billion in cash. Like, I mean, is it crazy to say GameStop is a 2026 potential sleeper?
I'll give you
$8
my
billion in
take.
cash?
Look, here's my prediction with GameStop. They're going to buy Collectors, which is a private company which owns PSA. They're going to become a nationalized card shop because they can't remain a video game shop. They're going to have a PSA grading center at every store that they keep, and you'll be able to have 24-hour turnaround, and you'll be able to pay an upcharge for a 2-hour turnaround, and they're going to make a mint off of that. I'm telling you, that's the only thing that makes sense for them. They didn't raise $4 billion for no reason.
I don't disagree. And they have Bitcoin as well.
Wait, so real quick, Fanatics won't allocate to them, and they make cards. I don't know for certain that they don't make cards, but I don't think that they make cards. I think that they have specialty sets that are GameStop only from the Pokemon company. Pokemon's not made by GameStop, nor is Magic the Gathering, nor is One Piece, nor is Flesh and Blood. None of the trading card games are made by GameStop. So I don't think that they make cards. And if they did make cards, they're not making anything good enough that they wouldn't get rid of to get allocation from Fanatics. And to say the Fanatics wouldn't allocate to them, of course they would. Like, GameStop would be a bigger outlet than Target and Walmart for them. So yes, they would allocate to them. Absolutely.
Yeah, I will look at Path. I mean, there's a couple people that ask me. I just the AI part of RPA, I'm still trying to wrap my head on if that's like a real business in SaaS that is independent of the other SaaS companies. But I will look at Path. And yes, they have no debt, which helps the case. This thing, Sachin was in Path for a while. He left a couple of months ago because he got annoyed by it. It's up 20% this year. Kathy had a Path, P-A-T, UiPath. Kathy had she had 40 million shares of this shit.
Oh, man, I have an idea. You know what?
This stock was $80 in 21, bro. What?
To your question, I'm taking one of my companies out. I don't know which one. I'm going ArcG as the dark horse.
ArcG?
Genomics is going to be big. I just don't know when.
Yeah, maybe 2026. Maybe.
Because you have to think, what's the biggest problem? Cancer, blindness, deafness, heart disease. If AI is going to do what we think it's going to do, to think that it's not going to make profound advancements in healthcare, I just think that this is an industry that is ripe. I really do. It may not be 2026, but at some point in the next 5 years, I think genomics is going to be freaking crazy. And I think it's going to be one of the biggest beneficiaries from AI.
I don't disagree. It's up 30% this year. That could continue.
Which could be nothing. I mean, this is something that was it was around 110 in 2021.
Well, let's give a shout out to one of your mods and my mods as well. If you share my screen. HVAC, baby. Shout out to Austin for Fix. This thing was up 18% after hours.
Jeez. Congrats.
It's up over 100% year to date. HVACs, there's a role in the data center HPC market that HVACs are going to play. And this is This is the type of stuff that I'm talking about. Like, who would have thought HVAC systems was going to be a double this year?
Oh, so you want something like that? I got one for you, QXO.
QXO? Well, Ken talks about this all the
QXO,
time.
Brad Jacobs, baby.
Wait,
QXO.
no, QXR?
QXO.
No, but isn't Brad Jacobs from GXO?
No, Brad Jacobs built the trucking company. What was it?
Oh, he's the chairperson of QXO. Okay. Gotcha.
Why am I blanking on this?
Both, right? Yeah, both. He's part of both. Yeah, he is part of both. We just did a Spaces on GXO 2 days ago. So that's why I remember Brad Jacobs. Yeah, but some of these names, right? Like these
he
are
built XPO Logistics. Is what he
Yes,
built. So I know somebody that knows him personally. They said he's the smartest person they've ever met. I put a lot of stock in what this person thinks. And this is a company that if he replicates what he did with XPO, this could be huge. And they're looking to revolutionize home building.
Yeah, GXO is their warehouse automation company. I agree, and those might be the names that are trading at very reasonable multiples that could be outperformers in 26 if they get re-rated in the thematic that matters.
Yeah, it's a building products distribution company, and they're looking to go on a huge acquisition spree and build out a better way to service builders. And if you think that all this data center expansion is going to happen, they're going to do well.
Yeah, agreed. See,
And
these are
yeah.
These are the types of names I want to see going into 26 because they're under the radar enough where any level of earnings growth should, like an HVAC, right? Up fixed, FIX up 100% this year. I'm pretty sure a lot of retail missed it because they just didn't know about it.
Did he build United Rentals also? Somebody said that he built United Rentals. I didn't know that.
I got to look more into this Brad Jacobs guy. Apparently, he has he's worth $14 billion.
Dude, go in our text message tomorrow. Text Ken.
He knows about him a lot.
So, yeah, I'm not going to say where, but ask Ken what he thinks about Brad Jacobs.
Okay.
There's a whole big backstory for years about this.
All right. Cool stuff. Yeah, I'm not gonna be able to make it Saturday because I'll be with my parents for birthday weekend.
Okay, we'll miss you. Tanner and I are going to be doing some MMA tier lists.
Yeah, see, I wouldn't even be useful, dude. I'd legit be.
Yeah, but you're useful for the movie tier list.
No, well, I'm useful for people that actually understand how to watch and commentate on movies. Unfortunately, you and Tanner and Matt don't fit that category.
Of course not.
I wish I could talk movies with you guys one day.
I know.
One day.
I mean, they probably have a tier list for the best Michael Jackson songs.
Oh, that can we do that? See, I need someone who actually listens enough. I could do that. I could do that for 4 hours, dude.
All right, hold on.
I could talk MJ songs for 4 hours. And I think I would create the best top 10 list of all time for Michael Jackson songs. I think Tanner's a decent MJ fan. Yes, I would be useful in the Dawson's Creek chair. Dude, Steve, why have you not watched Breaking Bad yet?
I've tried. I can't get through the first season.
You need to try again, bro. Like I cannot believe you haven't really taken that seriously.
Oh, I've taken it seriously. I can't get through it. All right, I'm in music. They gotta have a Michael Jackson thing, don't they?
We just make it ourselves.
No, but this has. Hold on. Let me just. I mean, you saw it, but this has everything.
Yeah, I know. I saw what you
like pop artists, most recognizable songs. See, they have a Taylor Swift one. I'm surprised they don't have a Michael Jackson one. But I like it because you can just move the people right up where you need it. Like you don't have to do anything. It's great. It's already made for you. Like, here you go, Drake. Boom. Right? You love Drake.
But do they have his songs?
No, it's just tier list.
Oh, it is just okay, or just artists. But
This
that
is
okay, that's
pop.
yeah, I'm talking about Michael Jackson's song.
Yeah, I thought that they would have it. I'm not seeing it.
Oh, okay. Yeah, I did play the Just Dance Michael Jackson back in 2010. Dude, I could do a legit MJ tier list for this.
I'm sure that they get. Is there a search? Tell me that they don't have. Oh, they do have a search. Hold on. Here we go. Michael Jackson songs.
Bro, I could sit and do that for a long time. I really could.
Oh, there you go. Smooth Criminal. Where are you putting this, Amit? Come on.
Oh, we're not doing it right now, but
Where are you putting it?
Oh, of course, it's S tier. It's GOAT. Like
Goat. Okay.
Smooth Criminal's GOAT, dude.
We'll leave it at that. We'll leave everybody with something, and I will sit here with you while you do this, so I can see where your head's at.
I could absolutely have a legit list. All right, cool stuff. I think, yeah. I mean, Steve might be on the market close tomorrow, potentially.
Call me. I'll be beeping in traffic.
Yeah, we'll end out the week, dude. The fact that market's up on this Canada stuff is hilarious. And oh, do we really think Trump's not going to talk to Canada because of freaking Ronald Reagan? Like,
There's gonna be a phone call tomorrow morning.
yeah, Carney's going to be like, dude, we're sorry, like yada yada yada. And then there you go. All right. Are you staying on?
Well, hold on a second. Yeah, the back to Zoom, you don't need a bolt-on for anything. I mean, these platforms that aren't even Teams and Google Meet, they have GoToMeet included with the license, so like it's not needed. But all right.
Are you staying on or are you ending the whole thing?
No, I'm gonna. It's too late. If I stay on, it's gonna be one. I got stuff I gotta do tomorrow. I have early meetings.
All right. Well, thank you, everybody.
Thank you, everybody, for staying. This has been means a lot. Really appreciate all the support.
Dude, Steve's about to hit 10K.
Like and subscribe.
All right. See you guys.
Appreciate it. Thanks, everyone. Later.